Thank you very much. We shall not continue waiting again. We shall be able to start. I'm calling my colleagues so that we start with the national anthem. Please, Mr. Naseme. We shall all stand for the national anthem. Those who are ushering, please help us so that people are seated on the seats in front. Please let us not sit behind. Let's get covered. Please, welcome. Ilete baraka kwetu. Mashariki, Sayese with Namrani, within the Goyetu, Nundunetu Yotetu Bidinde, Jishendelike, Najawetu Asante sana. We can now get seated. Karibu sana.
Thank you very much, Mr. Sawe. That's my colleague called Isaac Kibet Sawe. My name is Sylvester Nyaseme. We want to welcome again all of you into this place. This is City Square Post Office, and it's such a great honor that we are able to be given another chance to hold this meeting here. Without much ado, I'd like Mr. Mwai to open the place with a word of prayer. Mr. Mwai, please.
Thank you, Mr. Jaseme. I want to ask everyone to keep upstanding again for a word of prayer, please. Let's stand for a word of prayer. Let us believe and pray. Baba yetu na Mungu wetu, tunakushukuru, tunakuinua. Ni kwa sababu wewe ni Mungu mkuu, Mungu mwenye neema zote. Tunasema ni asanti kwa sababu unastahili. Wewe ni Mungu ambaye ametuamsha asubuhi ya leo na ukatutuleta mahali hapa. How, oh Lord, we pray that you give us a good time. That Lord, as we sit and do the deliberations, Heavenly Father, your Holy Spirit may walk with each one of us. We adore you. We are pleased to your holy name, for there is no other God like you. We want to thank you for this great day, O Lord. We only planned, but reaching it, O Lord, has taken your great heart. How we pray even for those that have planned to be with us, O Lord. We pray that you hasten their steps so that we can start together and be blessed together. But Father, King of all glory, when we do the deliberation safely, we shall give honor and praise to your holy name. Bless each one of us. Bless every speaker. Bless all the stakeholders. That, Lord, together we shall say, Hakika tumeona mkono wako. That's a prayer of faith. In Jesus' name we pray. Amen.
We can be seated. Thank you, Mr. Mwai. We'll continue welcoming each and every one of us. As you come in, do the registration, and we'll request you to come and sit in the front seats so that we be together, tukue pamoja. Thank you very much. We want to welcome each and every one of you. And it's a great day. It's a great day and a great honor. I learned Mr. Sawe to continue.
Thank you again, my colleague. I want to take this opportunity to welcome, because this AGM is all over the nation. We have pension members watching us from all over the nation. Please, I want us to prepare our hands so that we clap. And of course, we shall welcome those who are in Coast Province. Let us do some putting our hands together, please, all of us, tufanye kwa upendo, tufanye kwa furaha, siku yetu kubwa. AGM ni siku kubwa. It is 365 days from the time we were here. We were here on 14th of December 2022, and today is 14th December 2023. 365 days. And people are watching us all over. Our members are watching us all over the nation. Let us welcome people from Coast region. Please, all the hopefuls together. Kwale, you are welcome. Those who are in Mombasa, you are welcome. I know they are watching us. Those who are in Malindi, Kilifi, Lamu, we are all welcome. Those who are in Garissa, the areas of Garissa, Wajir, Moyale, North, the other parts of Eastern, they are all watching us, and we are welcoming them. Those who are from Lodwar, Lokichar on the far end, Lodwar, Lokichar, Lokitang, Kakuma. We come to Kapenguria, they are watching us. And those in Kitale and Eldoret, they are watching us. Kapsabe too, Kakamega and Webuye, Bungoma, Vihiga, and the rest, they are watching us. Let us welcome them all. Those who are in Makueni, Machakos and the environs, they are all welcome. They are watching us. Please let us put our hands together for all of them. Please, plus Nairobi, all Nairobi CBD area, Westlands, East Lando, and all the areas covered. They are those who cannot be able to be here. They are watching us online. They are watching us on YouTube. They are watching us on Facebook. They are watching us on Twitter, called also X. They are all watching us, so we welcome all of them. The first 7 counties, all included. So I want to call upon our brother who is the administrator, of the pension scheme, to come and give us the introduction and to give us the opening remarks. Mr. Koskei, please welcome, so you can be able to do that.
Thank you so much, Mr. Sawe. Good morning, members. Good morning, members. Are we here? Tupo? Hebu niwaone. Asanteni. We wish to welcome each and every one of us to our annual general meeting today. We have the meetings for the 2 schemes. We have the old scheme, which is the 22nd meeting. And we have the 14th meeting of the new scheme. As we go on, tukiendelea tutajua tofauti kati ya hizo schemes mbili. So nachukua fursa hii kuwakaribisha nyote kwenye hili AGM kwa Kiswahili. AGM haina Kiswahili. Ni AGM. Iko na Kiswahili? Mkutano wa mwaka. Kongamano la mwaka. Asanteni. So without taking much time, I want to propose the agenda today. I think all of us have the agenda. The agenda has been circulated. If you look in your bundle of documents which have been distributed, we have the agenda for our meeting today. And our meeting, reading of the notice of convening the annual general meeting, which I have just done. Those of us who are watching online, I believe you are able to follow us. The agenda is displayed there for both schemes. And the agenda is as follows. I'll take you through the agenda so that we then adopt it. Introductions, which I will shortly do. confirmation of minutes of the last annual general meetings, which were done here on the 14th of December last year. Report of the chairpersons of the two boards. As you are well aware, we have two schemes. Then we have the presentation of the audited financial statements for the year ended 30th June 2023, which are going to be presented by the manager finance and confirmed by the auditor. We will also have a presentation by the fund managers. One of them is going to present each scheme. We have two fund managers for each scheme. So one is going to present on behalf of the DB scheme, which is the old scheme, and one is going to present on behalf of the new scheme, that's the DC scheme. Then we will have presentation by the fund custodians. We have custodians in the house, two of them, for the old and the new scheme. We will also have a presentation by the actuary. The actuary is in the house. By the way, they were all here in time. We have also presentation by the property managers, well represented, they are here. Presentation by RBA, yes, the RBA representative is also here. Trustee remuneration policy, we'll present a paper on that shortly after the presentation by RBA. Then we will have a report of the sponsor, so we expect the sponsor to also make their presentation, because this is a scheme sponsored by Postal Corporation of Kenya. So Postal Corporation of Kenya is also going to be present in the house. As much as you are present here today as members of the scheme. You are not employees of the corporation, you are members of the scheme. But when the Postmaster General comes, you become employees of the corporation. Then we will go to question and answer session, where we shall facilitate that with the trustees. And then lastly, we'll have a vote of thanks and a closing prayer. So I want us to adopt the agenda of our meeting today. So I would like to have a proposer. Someone to propose. Yes, Beatrice Lusuli. I don't know who is recording for me. Beatrice Lusili proposes. Who is seconding? Who is seconding? Yes, Omai is seconding the adoption of the agenda. So we consider me allow the trustees to introduce themselves. So I'll start with the chairs of the two schemes. I'll ask the older one first. Old scheme chair to introduce herself and her team. Chair.
Thank you. I think it's ladies first. So I want to introduce my members first, and then I can introduce myself. Or should I do it the other way around? Okay, fine. So my name is Zuleka Mohammed. I'm the chair of the PCK staff pension scheme, and we know it as the old scheme. Okay, the people who are supporting me in running this scheme is Mr. Moses Mwai here. You can now wave Mr. Moses Mwai so that they can see you. Okay. Then I have Mr. Julius Opini. Julius. Then I have Trustee Michael Cheriot. Oh, well done, Cheriot. Sorry. Then I have another lady, my dear Elizabeth Shungula. And last but not least, Mr. Joseph Tele. Thank you.
Thank you. Those are the trustees of the new scheme. Old scheme. Sorry, they looked younger, so that's why I said new. Yeah, old scheme. So I'll give this opportunity to Trustee Mukhtar, who is the chair of the new scheme, to introduce himself and the rest of the board members.
Good morning, members. My name is Mukhtar Abdullahi. I'm the chair of staff retirement pension scheme, which is called the new scheme. I will also introduce the trustees we work with. I will start with Nancy Madenge. I will start with Trustee Frederick Siengo. The next is the young baby in the house, Moses Odoyo. And then finally we have Munai Film. Yes. Thank you. And those are the trustees that we are working with. Later on, I will mention to you we are missing one member. Thank you very much.
Thank you, chairs of the two schemes. Just to emphasize, the role of trustees is to ensure that the scheme is managed in accordance with the existing regulations which are contained in the Trust Deed and Rules and the Retirement Benefits Act. So by law, trustees are appointed to act on your behalf to manage your funds, the funds of the scheme on your behalf. So I'll move on to the next item of the agenda, which is confirmation of the minutes of the last general meetings. So during the last general meetings, we had two meetings, again, which we conducted on the 14th of December 2022. And I would want to take you through the minutes of the Postal Corporation of Kenya staff pension scheme, which is the old scheme. And I believe each and every one of us has access to the minutes, or you can be able to view them on the screen. For those who are watching online, you're able to follow. The first page contains those who are present. We had trustees. Of course, you will realize that the trustees look fewer. Yet we have very many trustees here because each scheme is having its own minutes. Then in attendance, we had all our service providers who are also present here today. So during the meeting, we had an agenda, and the agenda all those members who attended. About 246 of you attended the last AGM. So those are the minutes of the last meeting. So we would want to confirm the minutes of the last meeting, SPS meeting. Proposer, yes, proposed by Kitili. That's Kitili, yes. Kitili. Okay, seconded by somebody to second, somebody who was in the meeting to second the minutes. Anyone online, probably? We can also give an opportunity to those who are online. If some of you are present, you can have an opportunity to second the confirmation of the minutes. Yes. Nyaseme, thank you, Nyaseme. Thank you. I'll take you through the minutes of the other scheme. The minutes of Postal Corporation of Kenya Staff Retirement Benefit Scheme. Again, the meeting was conducted on the 14th. On the 14th of December last year. And those who are present, you can see the list of the trustees who are present, as well as the service providers who are present. Yes, we had all the trustees, 5 of them were present, and in attendance we had all the service providers present. Again, we went through the same kind of an agenda where $540. And again, the auditor gave an unqualified opinion stating that the financial statements reflected a true and fair view of the scheme's financial transactions for the year ended 30th June 2022. And this assessment was in accordance with the International Financial Reporting Standards and the Retirement Benefits, Occupational Retirement Benefit Scheme Regulations 2000. But again, the auditor had an emphasis of matter. This is a statement that, if not checked, would make your accounts to be qualified. Without qualifying their opinion, the auditor drew attention to note number 16. If you look at the financial statements, note number 16, it reveals that the scheme had contributions receivable from the sponsor amounting to almost 1.2 billion. 1,195,369,754, and interest and remitted of almost the same amount, 1.173, which had not been remitted. So that, if you total the two, that explains that impairment. The auditor emphasized that the conditions can cast substantial doubt on the scheme's ability to meet future benefit payments to members as and when they fall due, unless the sponsor commits to remit all outstanding contributions along with the interest levied on them. So the survival of the scheme, according to the auditor, depends on employers' remittance of the outstanding contributions, which stand at 1.195 and interest of 1.173. Again, the service providers presented their reports, starting with the custodian report, who indicated the total assets held by the custodian standing at 1.5 billion, and the percentage holding against what is required by the Retirement Benefits Authority. Moving on, we also received a report from the fund managers. The fund managers include ICA Lion and African Alliance. So they have an allocation of funds which they are under their management, and they reported accordingly, where ICA has 810 million, while African Alliance 784. The Retirement Benefits Authority presentation, they also did their presentation, and I want to only emphasize on the areas of compliance, on documentation, filed up, everything is up to date. On the reporting, compliant, levy, compliant. I think the only issue that RBA had was the status of the unremitted contributions, which I have talked to earlier, especially when I was presenting the issue of the financial statements, that the scheme unremitted contributions continue to grow to a level that may not be sustainable in the future. So again, we received questions and answers from members, and probably I can sample out a few. I think one of them, because this touches on this scheme directly, POSTA has not remitted 1.3 billion. What are you doing as a scheme? So in our response, the scheme trustees have been pursuing the sponsor on the unremitted contributions and are currently in court. Further, the sponsor is pursuing transfer of properties to the scheme through the cabinet to offset the unremitted contributions. The rest you can be able to read through and see whether it can answer a question that you may have. So that marks the end of the minutes of the SRBS, the new scheme. Again, we had the list of members. Of course, the membership is mixed because we have members in both schemes cutting across. So I would like to have a proposer. Yes, proposer to propose the adoption of the minutes, or the confirmation of the minutes. Yes, Sakuda proposes, seconded by Metich. Thank you. So going back to the agenda, having gone through the minutes of the last meeting, I will then invite the chairperson of the old scheme to present her report for this current financial year. Karibu Chair.
Good morning, everybody. Good morning. Thank you very much. Is it the cold which is stealing our voices? Ama ni baridi? Okay, karibu sana. Again, it is with great pleasure that I welcome all members and all stakeholders to our 22nd Annual General Meeting. I am delighted to present the pension scheme report for the year ended 30th June 2023 on behalf of the Board of Trustees. This report is just going to be a summary, which is going to be expounded by the service providers who are here, and I think we are going to introduce them later as they present. The year ended was characterized by challenging investment environments arising from volatility in the equities market, inflation, and reduced government expenditure. However, in spite of these challenges, the growth momentum and returns witnessed in the previous financial year continued to the year under review, albeit at a lower rate. Now, as you are aware, the main objective of the scheme is to provide cash and pension benefits to members on retirement or relief to families in the unfortunate demise of a member. In this regard, we wish to notify our members that this objective was achieved 100%, and payments totaling over Kenya shillings 479 million were made in respect to pensioners and other members who retired during the year, totaling approximately 2,083. I don't know whether you're following my report. Okay, I want to take you to this bar graph. Secretary, the bar graph. Okay. Now, this bar graph shows you the history of the scheme performance from the time of its inception in 2010. And you can see that the scheme has generally grown from 3.5 billion in 2010 to 5 billion and plus currently. That is up to June 2023. Okay? We can see there was a peak in 2015, and then another decline on 2016 and 2017, and then it peaked again and in 2018, and it has continued to go down to date. Now, generally, the reason for this decline is because this is a closed scheme. That means we are not getting any payments from members, and so we have to do with what we had from the time of inception. Okay? So the only amounts of monies which we get in is through the investment, financial investment returns, and returns from properties. Okay? Now, we have two main investment portfolios which I've mentioned, that is financial and properties. So I will start with the financial investment. Okay? Now, the value of the scheme investment portfolio decreased from 5.3 million, that was last year, as at 30th June 2022, to Kenya shillings 5 billion 37,673,130,000 as at 30th June 2023. As I tell you, the decline is attributed to change in fair value of financial assets, which declined by Kenya shillings of approximately 124 million. Okay? However, despite the decline, the scheme was able to pay retirement benefits of Kenya shillings approximately 479 million and plus through returns on investment and part liquidation of financial assets. Later, I'm going to explain what we mean by liquidation of financial assets. Okay? Now, you might want to know what financial assets we have, and you can see them there. We have offshore investments, holding or rather comprising of 0.634%, comprising of Kenya shillings 32 million plus. We had cash balances of around 77 million, comprising of 1.35%. We also had fixed and call deposits at 5.46%, comprising of 276 million shillings. We also had local and regional equities comprising of 5.39%, totaling to 272 million shillings. Kenya government securities at 1.1 billion shillings, comprising of 23.3%. So the financial assets gave a return of Kenya shillings 22 million plus, and our focus is to increase exposure in financial assets from proceeds of sale of properties. Later, I will explain why we are talking about sale of properties. Now, we are going to now the property portfolio, and as you can see, and we have been explaining throughout that our property portfolio is above the Retirement Benefits Authority regulations, which require us to not exceed 30%. However, what we have currently is standing at 63.7% of the fund value. So therefore, we are not very compliant with this class regulation. However, despite this big percentage of the value or in property, we only get 2% in terms of returns. And when you compare with what we get from financial assets, that's very minimal. Yeah, you can see 2% and 13%, isn't it? And this is where we say we need to offload some of these properties so that we can invest the proceeds in financial assets so that we can get more returns. Okay, so as I said that we got 2% of returns from the properties, but compared to the last financial year, we can see that this amount increased from 88 million to 94 million shillings. Now, we can look at the pie chart. Yeah. Is it the pie chart which has the property? Okay. This is now the asset distribution which I read to you. I don't think I need to go there. Okay. Now, in these assets, maybe just for your information, we can explain that we have two categories of properties. We have the residential properties, which is the Lantana. We have the Riverview apartments, and we have now the commercial ones, which are GPO, Mombasa, and Ronangala in Nairobi. Did I miss any on the rentals? Yeah, okay, so that's okay. And of course, we have a plot in Voi, yeah, which we have not been able to sell. So now, I think in short, that is where we are in our investments. We now go to the challenges which we have faced in handling these properties, yeah, and we are saying one of them is on low occupancy, especially on the commercial properties, which are the GPO, Mombasa and Ronangala. Okay. And you can look at the table, maybe secretary, you can see the occupancy level at GPO Mombasa is at 68%, but it has grown from last year by 1%. Okay. Then we look at Ronangala, In Nairobi, which is at 50%, it has also grown from 42%. Okay. Now this might look a bit small, but it is a big thing, because getting tenants in this current market is very, very difficult. But I thank our property managers. They have done quite a lot of things, and they have managed to get some of these tenants. And one of the issues why we are not getting tenants is because these properties are quite old, and they require a lot of expenditure to maintain them and bring them to that level where we can get market rates. So that is also a challenge, and we have been going a bit slow on that. Because you can imagine we would put a bigger investment and getting fewer returns. So it doesn't make business sense, does it? Then we have our lantana, mansionettes and flats. Those have been occupied 100%, although the market, the rent which we are getting is not very current. Again, because these are old properties, they need a lot of investment in terms of repairs so that we can get now the market rate. Okay? We also have Riverview Apartments. This one, the occupancy level has gone a bit down because we increased rents. We were in court, and the court allowed us to increase the rent to 40,000, and quite a number of tenants who could not afford were now leaving. So that is why you can see that the occupancy level is at 94%. Now, the Voi property has some two houses which are occupied, and I can assure you that tenants are paying the rent as required. Now, you remember I told you that we need to offload some of these properties so that we can now get the proceeds and put them in financial assets so that we get a bigger, greater returns, which will make our scheme perform better. I think basically that is what I have on our investment portfolios, and we now go to our way forward. Okay? What do we want to do in the next financial year? Already we are in the second quarter. We have done some of these things, yeah, but there is one issue which is really giving us a headache, and this is the continued liquidation of performing financial assets. You remember I told you that we are liquidating some of these financial assets to enable us pay or meet our payments schedules. And this in short means that we are now eating the chicken when we are supposed to eat the eggs only, isn't it? Yeah? Isn't it? And it is worrying, because if we start eating the chicken pole pole, it will die and we will not have any monies to pay in future, isn't it? So it is pertinent that we sell these properties, and we urge you to give us that support so that we are able to sell these properties. So that when you see, already we have started the process, and when you see these adverts on in the newspapers and in social media, please don't now say, oh, trustees are now trying to sell assets so that they can pocket the money, isn't it? It is because we want to offload some of these properties and invest in financial assets. Okay? Now, the other issue which we had a challenge on is the review of rents to market rates. This also has been an issue for quite some time, because tenants have been taking us to court. Yeah, whenever we want to review rents, they take us to court, but we have managed to get some positive rulings, and we have increased rents, and and you can see that the returns on the same are a bit higher than last year, okay? Although we still have some litigating matters on these issues, but given time, I think they will also go away. Again, on service improvement, we are doing a lot in terms of further improvement of the processes. We have automated some scheme operations, and you know that we implemented the ERP and the records management issues, which allow you to go through the portal and see all the documents and all those information which we have posted there. So now you don't need to come to our offices, but you can do that at the comfort of your rooms or houses or wherever you are residing in. Again, we want to update scheme policies to comply with the changes introduced from time to time, and this is mandatory because these policies are not constant. So whenever there are changes in the market, we also now comply and change them to suit our policies and regulations. I've mentioned the electronic document management system, isn't it? So this one has improved our efficiency and turnaround time in responding to member queries. I also want all members to be encouraged, to check their details online, and the link is there provided, so that you can have some of the questions or queries which we have answered. Okay? And it's also good that you give us feedback on the same, so that we know where we are ailing and where we can improve on the same. Good. I think that was my summarized report. Of course, the service providers are here. They'll be able now to confirm what we have told you, whether it is the truth or we are just putting stories, but we'll give them time to do that. Okay? I want to recognize and appreciate the trustees who have served with me during the year for their support and dedication. I also wish to thank the following for their dedicated support to the scheme. First and foremost is the sponsor, of which if he was not there, we wouldn't be there also, isn't it? So we appreciate the sponsor for having the scheme running, and we also I also want to appreciate all the members of the scheme and the secretariat, headed by our able CEO, Mr. Koske here, who have made all this possible. We also want to appreciate our scheme or service providers, that is now the scheme custodian, who is Stanbic, I believe they're here. The fund managers, Sanlam Investments and Old Mutual Group, the scheme property managers, that is Kiragu and Mwangi, last one, Lesser Properties and Regent. The scheme auditor, MS Matengo and Associates, and the scheme actuaries, MS Zamara Actuaries Limited. And of course, all you members who have made this possible. If it were not for you, definitely we would not be here. So I want us as trustees to encourage members to be very, very vigilant and go through all your data and see what we are doing for you, isn't it? Because this is your money. We are only holding it in trust for you. Thank you very much. God bless you.
Tuweke mikono yetu pamoja, tupige makofi kwa ajili ya mama wa nguvu. Pamoja tena, huyo ni mama wa nguvu kabisa, amesimama na sisi kuhakikisha kwamba fedha zetu zimekuwa invested. Tumesikia property, hiyo ni investment inafanyiwa ili tuweze kuona pesa yetu imegrow. We are so happy so we are now ready again to have the chair of the benefit scheme to come over. I don't know, DJ. Aya, DJ, tuweke wimbo ambao inasema tai. Yes. Yaani kusema kwamba sisi kama scheme ni mbele. As we are taken through by the chair to take us through. Thank you. Yes. Give it time. Asante sana.
Thank you very much, Isaac Sawe. Once again, my name is Mukhtar Abdullahi, the chair of the Staff Retirement Benefit Scheme. First of all, we would like to thank the Almighty God. As Sawe has said, we were here last year, 14th of December 2022, and some of us maybe who are here are not with us today. So lazima tushukuru Mwenyezi Mungu ambaye pia ameturudisha hapa leo tukiwa na afya mzuri. So I also want to make my remarks concerning the staff retirement benefit scheme. And I think for the benefit of the members, I know there are quite a number of members who have joined us even after the last AGM. As trustees, we'll make arrangement to do members' education very soon, so that this issue we are mentioning of old scheme, new scheme, some of you may not even be really members because Nancy has not started deducting the contribution from you since you joined them. So we'll do very soon members' education. So it is with great pleasure that I welcome all members and stakeholders to our 14th annual general meeting. I'm delighted to present the pension scheme report for the year ended 30th June 2023. The scheme during the year continued to face challenges as a result of non-remittance of contribution from the sponsor, which have now exceeded 1.3 billion shillings before interest is charged. As you are all aware, from 2015, our sponsor employer has not been remitting pension contribution in terms of employer and employee contribution. So that has been a big challenge, and it has been mentioned by the former chair. If we don't, our only income is that contribution that we get from the members' deduction, the employee deduction. If we don't receive, we are only using the funds that we have. The sponsor in December 2021 resolved to cease further deduction from members and reduce the employer contribution to 10% from the previous 12%. The value of the scheme investment portfolio declined from Kenya shillings 1.6 billion as at 30th June 2022 to Kenya shillings 1.284 in the current period as at 30th June 2023. The decline is attributed to non-remittance of contribution, yet the scheme pays out benefits. The change in fair value of investments, which declined by 157 million, and impairment provision on unremitted contribution of Kenya shillings 297 million in accordance with International Financial Reporting Standard number 9. Technology. Under investment, the net decline in the scheme assets as at the end of the financial year was Kenya shillings 402 million as a result of unrealized losses of Kenya shillings 27,326,347 and liquidation of assets to fund retirement benefits of Kenya shillings 261,341,914 paid out during the year. As you are aware, over 250 members retired during the financial year, and we used the funds that are available, which have already been invested in various asset classes, to be recalled back to pay the staff which are retiring. So the return that we could have got from the various investments could not be realized because we have been forced to recall back before maturity. So it is a challenge if we are not having income that is coming from other sources. We were forced to recall the value of the asset that we already had. So during that period, we paid 261 million to the staff who retired. Despite the challenges, the scheme was able to declare an interest rate of 3% on the members' statement as at the 30th of June. If you go to the link that you are provided, there is an interest which has been provided of 3%. So if the scheme we were getting the employer contribution, the deduction coming in, the interest which was declared could have been higher. But due to that challenge, that is what we could be able to provide. But there's hope coming. The scheme will no longer print physical statement to save on cost and to give members convenient way to interact with the scheme. So kindly, the link you have been given is there. See how best you can log in and check on your statement. So the status of the scheme that is from the time it started in 2011 up to now, that is how it is performing. Maybe you may wonder why 2020 graph is higher. By that time, when the employer stopped the deduction, according to the RBA Act, Section 53B allows us, when the employer is not remitting the deduction, to charge a benefit interest charge, which we were just charging higher, and that's why the value of the asset went up during that period. But later on, after discussion with RBA, it was agreed that we charge the interest at the market rate. And that is, again, when the introduction of IFRS 9 came into being, and we were forced now to apply the requirement of IFRS 9. The scheme fund value has continued to decline as a result of impairment of interest that had been charged on the unremitted contribution based on the provision of Section 53A of the Retirement Benefit Act. The impairment was informed by the advice that the scheme charges interest using the average 91-day Treasury bill rate until such a time that the court case is concluded. The above fact explains why the scheme drastically declined from a high of 3.8 billion to now 1.2 billion, coupled with an remittance of the contribution for the last 8 years. The good thing with this impairment, according to the accounting standard, once PCK start remitting, if we get today that contribution, when Kimadi is preparing his financial statement next year, that the impairment which you have been declaring as a losses will be reversed back, and we believe our asset value will go up. The scheme continues to face challenges as a result of remitted. That one we have mentioned. I don't want to repeat. So, the status of unremitted contribution and payment of of the remitted benefits, the scheme continued to face challenges as a result of a remitted contribution dating back to June 2015, which has now accumulated to over 1.2 billion before interest net of employee contribution received for the month of February and December 2017, February 2018, April to November 2020, and August 2020, which were received by the scheme from PCK. The scheme has continued to charge interest in accordance with the law. It is to be noted that the situation remains the same after PCK resolved to stop further deduction from employees in December 2021. 1,451 members have since left the service of Postal Corporation of Kenya, and a total of 429 million being the unremitted contribution yet to be received from PCK. Receipt of contribution totaling to 85 million in respect to some of the members who have since left have been received and paid to them. PCK in consultation with the trustees are working to ensure payment in respect to the members who have left services are paid, as they also work on the contribution not remitted for employees still in service. Consultation between trustees, the sponsor, and the National Treasury are still ongoing to settle the outstanding liability. In an effort to hasten the process of the transfer of the properties, trustees moved to court in 2017 to compel PCK to pay the unremitted contribution. The matter was heard in February 2023, where PCK was given 120 days to complete and confirm the outstanding amount and to file in court the schedule of properties to be transferred to the scheme. Following the expiry of the 120 days, the scheme lawyer confirmed that PCK had not complied, and the court set the hearing date to March 2024. Meanwhile, as employees continue to retire, the scheme has continued to pay the portion of the contribution received with the interest earned. Trustees are holding consultation with the PCK and RBA with a view of receiving staff pension contribution and are hopeful that there will be positive result in the near future. The NSSF Act 2013, as you are aware, the new NSSF Act came into force after the ruling of the court case. Employees are therefore contributing to NSSF using the enhanced rate. Postal Corporation of Kenya is working on a plan to opt out of the Tier 2 contribution to be managed by the scheme, a process that is still ongoing. Trustees' remuneration policy, as mentioned by the staff, by the administrator, in the agenda we have the trustees' remuneration policy, which will be discussed and tabled. The RBA has gazetted the trustee remuneration guidelines that requires members to approve once every 3 years. Once every 3 years. You have approved this policy before. The 3 years is now over. There is a guideline which has been approved by RBA, and we are required to table before the members for approval. The rule says, if you approve, well and good. If you don't approve, status quo remains. The scheme will be presenting the same for approval by members during today's AGM. In conclusion, the scheme, despite the challenges of the unremitted contribution, has been able to meet its obligation during the year, and we expect the momentum to continue in the coming years. I would like to appreciate the trustees who have served me during the year for their support and dedication. The trustees who have served, today we don't have Simon Gashara, who was the chair before I took over from him. He has since retired. His term has ended as by the requirement of the RBA. Mr. Frederick Siego, I've mentioned Nancy Madenge, Filemona Munai, and Moses Odoyo. The term of Trustee Gashara ended in July, and the process of replacement is ongoing. I believe you have seen the advert, the announcement which is closing today. So please kindly elect a responsible trustee to represent you in the scheme. And election will be done next year, God willing, mid-January. I wish to most sincerely thank him for steering the scheme to this level during his term as a trustee and the chair of the scheme. Finally, I would like to appreciate the following for their dedicated support to the scheme. The sponsor, that is the PCK board, PCK management, all the members of the scheme, the secretariat headed by Administrator Elijah Koskei, the scheme custodian. Maybe I don't think whether they will get maybe chance later. Kenya Commercial Bank, are you there? Can you kindly wave? Thank you. That is the custodian. As trustees, we don't keep any money. If you want to know how our money is being used, he's the one who's going to confirm. We have the two fund managers, ICA, Lion, and Asset Management. Thank you very much. And then we have African Alliance Investment. Then the scheme auditor who is serving both Matego and Associate, and the scheme lawyers for their immense support during the period. We would like to thank the Retirement Benefit Authority. I don't know whether they are here with us. Thank you. Understanding the situation faced by this scheme has undergone a lot of challenges due to the unlimited. We had a lot of letters coming from RBA to close the scheme, but after various discussion with us, they were really supportive and working with us towards protecting the interests of both the sponsor and the members in line with their mandate. Lastly, we wish to thank all the members for actively participating in the AGM. We reiterate trustees' commitment to ensure that the scheme is well managed for the benefit of its members and that all efforts are being made to ensure the scheme continues to exist in the foreseeable future. The copy of my presentation is in the link provided. Please kindly visit the website of the scheme so that you can interrogate and read. Thank you for listening to me. Na asanteni sana.
Thank you very much. Mzoa Nguvu, our GM, we are so happy that you are the chair of the benefits scheme. Now, let us put our hands together in a strong way now for all of us, for the three teams. We have the administrator, Koske, who started, and the two chairs who have taken us through how our money is being managed and the properties how the properties are generating money. They are working day and night to see to it that our schemes grow. Let us put our hands together, please. All of us. Let this place flow with a lot of joy because of this work and a lot of encouragement to all of them. Together, let's go. Anyway, Asante, both here. Now we are very ready to call upon our brother who is now, we are going to the section of the service providers. We shall start with our auditor. I call him personally Auditor General because he was there last year and he gave us a wonderful report about the audited financial statement, and we are just about also again to call upon Kimathi to give us another audited financial statement for the year 2020, for the year 2021-2022. or 2023, 2022, 2023. Kimathi, karibu sana as you give us the report. Wimbo wetu anapokuja kwa sababu ameketi chini. Oh, karibu, umeingia. Asante sana, karibu. Yeah. Yeah. Karibu sana, karibu sana, karibu sana, karibu sana. Yeah. Mbele kabisa. Tuchukue mbele. Yeah.
Asante MC. My name is Onesimus Kimathi, the accountant of the scheme, the chair of both the schemes, trustees, members, and our invested guests. Good morning. It is my pleasure to present the audited financial statements for both the schemes. And it's a long document of around 30 pages. I will not go through all the pages. I only highlight the major areas which have not been mentioned during the previous presentations. And project page number 8, for the benefit of the members who are viewing online, page number 8. Membership, I wish to confirm that as at the 30th of June 2023, the total members of the old scheme were 3,492. Out of that, the active members who are in service were 1,068. Pensioners who are in receipt of contributions were 2,083. Now, I'll now jump to the financial statements. Please project page number 13, which is the income statement, which is summarizing all the incomes, all the expenses which were incurred in that financial year. So as at the 30th of June 2023, during that year, in terms of contributions and benefits, there was a transfer in amount of 59,582,991, which was an amount which was transferred from the Provident Fund, which has already been wound up. In terms of transfer out, one member transferred an amount of 13,208 to another scheme. Then for the members who left service, we were informed that the members who left service during that year, they were paid an amount of 479,048,502. If you compare with the previous year, you realize that there was a significant increase, and this is attributed to the additional members who left service in accordance with the age profile. As you are aware, this is an aged scheme, and also the payroll, which has been growing at the rate of around 5 million every year. So members, in terms of net dealings from members within that year, the amount stood at 419,478,719 Kenyan shillings. Compared with the previous year, so you realize that that negativity is explained by the fact that this is a closed scheme which does not receive contributions. The second portion of the income statement is the returns on investments, and I wish to confirm that for the 12 months ending June 2023, the scheme generated investment income amounting to 396,457. And if you compare with the previous year, you realize that there was a slight decline from 334 million, which is explained by the fact that, which was mentioned by your chairman, that the scheme, to be able to meet the obligations, it has been liquidating the financial assets. And by that liquidation, we have been eating the chickens. So when we eat the chickens, the ability to generate the eggs becomes lower. the same financial assets which the scheme has been owning for that particular year, they generated AROA and realized loss of 124 million compared to 186 million in the previous financial year. So members, that is a positive growth because of AROA negativity. In terms of the management expenses which were paid to the fund manager and the custodian and the property managers, they were paid 33,583,798, which is compared to 40,755,081 Kenyan shillings of the previous financial year ending June 2022. And this reduction of investment management expenses is explained by the reduction of the payment of the legal fees for the cases which are ongoing for the properties. In terms of admin expenses, the scheme incurred management expenses, admin management expenses amounting to 79,088,673. And that amount compares favorably with the previous year, where the scheme had also incurred the same amount of 79 million. But I wish to confirm that during the year, there was a reduction of the amount which was impaired for the rents which are outstanding and receivable from the spaces occupied by Postal Corporation of Kenya in Mombasa GPO and at Rona and Ngara. So members, at the end of the year, the total negative growth which was generated by the old scheme as at the 30th of June 2023 amounted to negative 340,225,173, which compares to a bigger negative loss in the previous year of 433 million. And that inability to generate higher growth has been compromised by the fact that the scheme is owning bigger portion of assets in terms of underperforming property of around 63%. Once the properties have been sold and those amounts reinvested in higher performing financial assets, believe me not, next year we'll be reporting better and higher returns. Let's project page number 14 for the benefit of the members who are online. This is the balance sheet of the old scheme summarizing all the assets and the liabilities of the old scheme. And I wish to confirm that the total net assets which trustees of the old scheme were holding on behalf of the members for the purposes of paying their benefits amounted to 5 billion, that 7 million is 673,123. And if you compare with the previous year, you realize that there was a decline of the negative performance which I've just read of around 340 million. So what is the makeup of the 5 billion? First and foremost, in terms of intangible assets, these are the assets held in the office in terms of computers and the rest amounts to around 211,000. Property and equipments, 2.7 million. Then the investment properties, which trustees mentioned, like Mombasa GPO, Nangara Post Office, Riverview Apartments, Lantana Mansionates, and the rest, their market value has been maintained or retained at 3.22 billion, and this is the amount which the chairman has confirmed forms around 63% of the total scheme assets. Investment at fair value and amortized cost, these are the ERP system at 1.76. Sorry, these are the financial assets, 1.7 billion. The accounts receivable, this is the amount which is in terms of the rent outstanding and other receivables. The total amount is around 68 million compared with 62 million in the previous year. I wish to confirm that PCK was able to pay some amounts to offset the rent in arrears, and this is part explaining part of the decline of the receivable. Cash and cash equivalents, as at the 30th of June, all the bank balances amounted to 77 million, compared with 45 million in the previous year, which is informed by the fact that the scheme was liquid enough to have enough core deposits and bank deposits to be able to meet its obligations. In terms of current liabilities, the unpaid benefits as at the 30th of June 2023, which were accrued in this financial statement, but they were paid in the month of July, amounted to 102 million. When you compare with the previous year, the accruals were less, and this one confirms that the scheme is continuing to meet its primary objective of paying benefits and leavers as they exit the services of Postal Corporation of Kenya. So members, that is the makeup of the total assets of 5 billion, which trustees will continue to own in the foreseeable future for the purposes of paying members as they retire. Page number 15. This is the cash flow statement, summarizing again all the payments, all the receipts in terms of financial assets, and all the activities which were carried out by your trustees in that particular year. And I wish to confirm that the scheme was liquid enough to meet its obligations as required by the law by paying benefits on time and the service providers as per the payment terms. So members, you realize that within that year, the scheme received 59 million from SRMBS, 59 million from SPF, being the transfer in for the members who have ended in the past. The scheme also paid out 447 million in that year for the members who left the service. In terms of the admin expenses paid out in that year, they amounted to 52 million, giving a net operating activities amount of negative 440 million, 510,000, 188 Kenyan shillings. Again, this category should be positive if the scheme was not a closed scheme. But for now, it is negative, and that negativity is financed by the cash from investing activities of 670 million. So at the end of the year, the scheme was very liquid to the extent that the balances of deposits and the cash bank balances amounted to 353,365,361. From page number 16, those are supporting notes to the financial statement. Kindly again in your own free time, kindly go through them so that you can have a deep understanding of the various activities which were carried out in that year. I'll stop there, but I will now invite the auditor of the old scheme called Matengo and the Associates to present their opinion, their independent opinion. Welcome, Mr. Auditor.
Coffee anapokuja. Members, let's put our hands together as we see our brother coming in. Thank you, thank you, thank you, members.
Good morning. Thank you for the opportunity to present to you our audit opinion for the staff pension scheme. If you can take us to page 10. That will be our opinion. So just before I take you through the opinion, I'd like to emphasize just 1 or 2 points. That the scheme has continued to do well over the period, even though we all know this is a discontinued scheme. So there are some pertinent challenges that I'd like to emphasize, that as auditors, even though you are likely to find that we have issued an unmodified opinion, we'd like to emphasize on. One of the worrying factors that has been read that I'd like to emphasize is the issue of the continued outflows of cash from this scheme. So as you can see, every year the cash outflows has continued to be high, and this affects our ability to pay the dues as they fall due. We also have the challenge of disposing the properties that we have that is holding a lot of cash for the scheme. Since this is a discontinued scheme, we would like to see more available for disposal items as part of our assets. I'd also like to comment on one thing that has not been mentioned, that is on impairment. Even though this has continued to be high over the periods, this scheme has more or less impaired most of the assets that it has. So the impairment that we have currently is for the rent that was not received from the sponsor for the occupancy that they have. So we expect that that will continue to be at the same rate for the foreseeable future unless something happens. And lastly, I'd like to commend the management for being prudent enough in managing the expenses of the scheme, but to draw your attention that even though it remains relatively the same, the scheme assets are going down, and as such, it needs to be going down at the same rate with that of the scheme assets. Now on to the opinion. Just to conclude is we'd like to draw your attention that the duty to prepare the financials rests with the management, and that is why you have seen Mr. Onesmus reading the financial statements, because that is their duty. And as such, it was prepared by the management and signed by them, led by the trustees, that is the chair. Ours was to look at the figures that has been read to you and to see to it that they give a true and fair view. So I'd want to report to you that the reports that have been read to you by the management team, including the comments that we got from the chair, were reviewed by us during the year, and we'd like to report that we have audited the financial statements for PCK Staff Pension Scheme, set out on pages 13 to 33, and the statement of net assets for the period up to June 2023. And that, in our opinion, the accompanying financial statements give a true and fair view of the state of financial transactions of the scheme during the year that has just ended. We'd also report to you that without modifying our opinion, we still carried an emphasis of matter for this scheme, even though, as we can see, if things do not change, unfortunately, the status of opinion might have to change for the future. So based on the facts that we have currently and the assurances that we got that there is a process ongoing to convert the property investments that we have into other categories of investments that are ready to be disposed when need be, because this is a closed scheme, we retained just an emphasis of matter. And the items that we'd like to bring to your attention is one is on note 13 that has been brought to your attention by the chair, that the scheme still holds 63% of total assets in terms of those investment properties. So there is the biggest challenge that the scheme has. It's also good to note that the scheme only gets around 3% from these investments. So that also brings into question whether the investments are actually of any benefit to the scheme. The values are quite high compared to what we receive from those investments. We also like to bring to your attention that the scheme, having been discontinued, should hold investments that are easy to dispose in order to meet annual net payments to members that has been averaging 420 million. We are aware that members leave the scheme every year, and we expect more to leave this year. So we expect to continue paying to the tune of between 400 to 500 million every year. Since there is no contribution, we'd like to bring to your attention that this is a worrying concern to us as the auditors on the ability of the scheme to continue to meet its obligations when they fall due. Even though we have not amended or adjusted our going concern qualification or status of the scheme. We'd also like to report to you that all the other objectives of the scheme were being adhered to, including the regulations that are there from the regulators and the standards that are applicable to the scheme during the year. These statements were signed by CPA Meshak Machengo, member number 2061 of the 27th of September 2023. Otherwise, I'd like to thank you once again for the opportunity to work with you and to be able to review your books of accounts for the year that has ended, and to the trustees led by the chair for the support that we got during the year as we were doing the audits for these books. Otherwise, thank you.
Thank you very much. Thank you very much. If there's anything you've picked from that, just know we need to invest.
Thank you, MC. As you are aware, we have two schemes, the old scheme and the new scheme. I will now move to the new scheme, which is registered in the RMBA as Postal Corporation of Kenya Staff Retirement Benefits Scheme. In terms of membership, as at the 30th of June 2023, the total members of the new scheme were 3,306. Out of that, members who are actively in service and contributing were 2,225. Then we have a small portion of defined members. These are members who left service, aged below 50 years of below 50 years of age, and these are 444 of them. Then we have dormant members. These are members who have left service, but they have not been paid up their benefits. So as at the end of the year, the total members who trustees were supposed to account for their benefits were 3,306. Kindly project page number 14, which is the income statement of the new scheme, summarizing all the incomes generated in that year and the expenses are paid out. As you are aware, this scheme is a DC scheme. It's supposed to NDRA. Members are supposed to contribute every month. So during that year, members contributed 70,517,062 Kenyan shillings. When you compare with the previous year, you realize that there was a big decline from 115 million. And this is again was explained by your chairman that the sponsor ceased to contribute for the members during that year, and also there was a decline of the contributions from Torof to 10%. In terms of payouts, during that year, for the members who left service, they were paid 261,341,914. When you compare with the previous year, members were paid only 176 million. So members will realize that the scheme was able to achieve a higher objective of its mandate by paying more members. But the only worry is that the ability to pay might be compromised by the assets which are there, because the scheme is not contributing optimally, and also of the unlimited contributions of 1.1 billion and the unlimited interest of 1.1 billion, which has already been fully impaired. There was no adjustment for the overstated benefit for this year. So at the end of the year, there was net dealings with the members of negative 190,824,852. If the scheme was operating optimally, this amount should be positive and a higher positive. But because of the fact that the contributions for the employee have not been factored in this financial statement, that's why we have net dealings with the members of 190 million. The next part of the financial statement is the return on investments. During that year, the existing financial assets which trustees are holding on your behalf and which the fund managers are been doing the tradings, generated investment income amounting to 172,918,950. This amount is in terms of interest income, dividends income, and rebates commission. When you compare with the previous year, you realize that there was a slight increase from 166,000. So there was an increase of around 4%. Again, this is explained by the fact that the assets or the portfolio which the scheme assets, financial assets are being held in are very strong, and they have been able to generate that investment income compared with the average performance of the market. The same financial assets which trustees are holding on your behalf generated a lower negative growth in terms of change in fair value of 72 million compared to a higher fair negative loss of 157 million in the previous year. Again, this is an indication of the improvement of the market and also the strong portfolio in terms of the various assets, which the fund managers have invested in. During that year, as it was explained earlier on, there was an impairment provision as required by IFRS 9 of 241,975,968. This explains the fact that now the contributions in arrears of 1.1 billion and the interest of those contributions amounting to the same amount of 1.1 billion are being fully impaired. But as it was explained by your chairman, upon getting that amount of 1.1 billion in terms of either assets or in cash, it will significantly improve the performance of the scheme in that year of receipt. In terms of the payment of expenses to the fund manager and custodian, they were paid 5.2 million in that year compared to 5.7 million in the previous year. So in terms of net returns on investments, the scheme net return on investments went down to negative 146,650,359 compared to negative 293,657,706. So that improvement again is attributed to the strong portfolio of assets which the trustees have invested in through the fund managers. In terms of admin expenses, as you are aware, we have one secretariat, so the expenses of the secretariat are shared between the two schemes. So the fair share of the new scheme in that particular year amounting to around 47% in terms of amount was 53,443,694. which compares unfavorably with the previous year of 23,845,285. So members, you realize that there was a major increase of around 28 million, which is explained by the payment of the legal fees for the case which was concluded, which was necessitated by the trustees going to court to be able to recover the contributions which were in arrears. In terms of staff cost, during that year, an amount of 11 million was allocated to the new scheme, which compares unfavorably with 10 million which was incurred in the previous year, and that increment of around 6% is explained by the hiring of interns and the annual salary escalation of the staff. So members, in terms of decrease in net assets for that year, there was a decrease of 402,605,272. This one we can describe it as the negative growth of the scheme in that year, which compares with a smaller growth generated in the previous year of 172,417,206. Page number 15, project page number 15, which is the balance sheet of the new scheme, summarizing all the assets and the liabilities for that year, which amounted to 1,284,753,138. So inside that amount, we have 1.1 billion in terms of contributions in arrears and 1.1 billion in terms of interest on those outstanding contributions, but both of those amounts have been impaired, giving us a net amount of 1.284 billion. What is the makeup of that amount? The first makeup is the financial assets. The market value of all the financial assets in terms of bonds, equities, and deposits amounted to 1,393,836.52 Kenyan shillings. This is the portion which has been generating enough investment income, which the scheme has been using for liquidity purposes to meet its obligations. So upon the scheme receiving contributions in arrears and the interest portion, that amount will be reinvested so that now the financial assets will almost double. In terms of receivables, the receivables as at 30th of June in terms of receivables, the amount which we have recorded in our financial statements was 14,627,918 Kenyan shillings, which compares with 210 million in the previous year. So that a significant decline is attributed to a further impairment of the contributions in arrears of around 195 million Kenyan shillings. Cash and cash equivalents, these are the bank balances and the bank deposits, amounted to 18,419,442, which further confirms that the scheme is liquid enough to meet its obligations. Within that year, there was a tax recoverable of around 644,000, giving total current assets of around 33,770,000. As at 30th of June, there was various accruals in terms of expenses, which were accrued in these financial statements, but they were paid in the month of July. And part of that was benefits. Benefits which for the members who left service as at 30th of June, but they were paid in the month of July, amounting to 142 million, which compares with 104 million in the previous year, and this is explained by the fact that more members left service and they were able to access their benefits. So members, in terms of the bottom line for the new scheme, at the end of the year, the scheme was able to generate a negative growth of 109,082,914 Kenyan shillings, which compares unfavorably with the previous year positive growth of 116,000, and this is explained by the fact that there were various disposals which were done within the year to provide liquidity, and there was also an unrealized loss which contributed to a negative growth in this financial year. But again, I wish to confirm, upon the scheme getting other assets to invest in the financial assets, the scheme trajectory in terms of growth and the ability to generate income will be looking up. So members, those were the total net assets which your trustees were holding on your behalf for the single purpose of paying your benefits as you retire. Kindly project page number 16, which is the cash flow statement. Again, this one is summarizing all the payments which were made in that year and all the incomes which were generated, again, from the financial assets. Again, this cash flow statement confirms that the scheme was liquid and very liquid enough to be able to meet its obligations as they fell due of paying benefits to members as they left service and payments to service providers as per the payment terms. If you look at the first line, the scheme received contributions amounting to 36,486,232, which compares favorably with the previous year, where the scheme had received a smaller amount of 24 million. This 36 million, these contributions of 36 million is not settling the arrears of the past. This is the portion of contributions which the sponsor paid for the members who left service to enable the scheme to pay their benefits. In terms of members who left service, they were paid 245,61,423, which compares favorably with the previous year, where the scheme had paid 177 million. So again, the scheme was able to meet a higher primary objective of paying members as they left service. And in expenses, the scheme was able to pay service providers an amount of 38,786,925. So at the end of the year, the cash from operating activities stood at 247,372,116. Ideally, if the scheme was operating optimally by receiving contributions on time, this class of operating activity should be positive and a big positive, so that upon receiving contributions, and using those contributions to pay benefits, the remaining amount would be available for reinvestment, and that reinvestment contributes positively towards the growth of the scheme. As long as the scheme is not able to reinvest, then the ability to grow is actually compromised. Cash from investing activities, during that year the scheme received investment incomes in terms of interest income and dividends income amounting to 176,897,221 Kenyan shillings. Investment management expenses, the custodian and the two fund managers were paying fees amounting to 6,051,401. The rest are activities, capturing the activities in terms of the tradings of purchases and sales of the financial assets, such that at the end of the year, the cash from investing activities stood at positive 204 million. So you realize that cash from operating activities was negative 247 million, which means that the investing activities did not generate enough cash to be able to meet the big gap expectation or demand from operating activities of 247 million. And that amount of the difference was received from the opening bank balances. So at the end of the year, the scheme cash balances and deposits amounted to 69,499,943, again, which goes further to confirm, although the scheme was liquidating its financial assets, which are providing investment income, the scheme was liquid enough to meet its obligations. From page number 17 to the last page, again in your own time, go through those notes so that you can be able to appreciate the various activities and transactions which were carried out in that year by your trustees, so that you can also be able to appreciate the challenges which the scheme has been experiencing. Again, at this juncture, I will invite the auditor of the new scheme, who is Atengo and Associates, to present their independent opinion. Thank you for listening.
Thank you once again, Onesimus, for the wonderful presentation of the financial statements. So if you can take us to page 12 for our opinion. I'd not repeat once again what has been read through, because I believe the presentation was great enough and we are all able to go through. So just before I do the opinion, there are items that have been mentioned that we also want to emphasize. One of them is a comment on impairment of contributions. That is the IFRS 9 for this scheme. The scheme has been impairing these contributions that have not been received over the periods. So by the time we are closing the year, basically the whole interest receivable has been impaired in the scheme. There is a small portion of the principal amount that has not been impaired by the close of the year. The total impairment that has not been mentioned to you, if you can see, is 2.3 billion shillings, almost double the asset base that we are having. So that tells you the challenges that the scheme is having as we continue to grow. The other item that I'd like to emphasize on is the issue of the continuity of this scheme. Now, you have been told that the sponsor stopped deducting members' contributions over the period. The sponsor has also not contributed or remitted any contributions for their own portion of this scheme. So based on just that mere fact, we are all aware that it might imply that the scheme is also closing down. Because if the sponsor does not deduct, and there is no remittance also from the sponsor side. So there is a big challenge in continuing to consider this scheme as an open scheme. So that is a challenge that I believe needs to be sorted out, because otherwise it might imply that in the future the scheme should be prepared as a closed scheme, just like the other scheme that we read earlier on. So that is another challenge I wanted to comment about. That has also been impacted by the fact that we are told that the return for the scheme is just 3%. That is what you've seen in the statements. The inflation that we have in the country is way above that, meaning that your investments in the scheme is generating a negative return. In short, your investment is going down in value as time goes by, because your return is way lower than our official inflation rate in the country. So as we are in this meeting, we'd want you to take a keen note of those facts, because they impact on the ability of this scheme to continue the way it should. Even though it was expected that it was to replace the other scheme that was closed, but it seems it might also have similar challenges that the other scheme is having in terms of the ability to continue as a going concern. So just as we close, we also like to report to you that the books are prepared by the management, as has been read to you by Onesimus. We'd also like to confirm to you that the statements that have just been read by Onesimus and by the chair earlier on are true. And we'd like to report that we have audited these financial statements for the period ended 30th June 2023. And in our opinion, the financial statements give a true and fair view of the scheme by the close of the year that has just been ended. That they were prepared in accordance with the IFRSs that are applicable and the occupational retirement benefit schemes regulations. We'd also like to report to you that, as a matter of emphasis, without a modification of opinion, just as the previous report that I read to you, that is also likely to have a modification of the opinion in future, this might also have a modification of the opinion in future, based on the three factors that I've just read to you, that I draw to your attention, note 17 of the scheme, that is the financial statements. The scheme has contributions receivable from the sponsor amounting to 1.2 billion. In 2022, it was 1.1, and interest and remitted from the sponsor that was charged of 1.1 billion. Now, these amounts have all not been received during the year. So we continue to accrue some small portion of sponsor contributions during the year, but the same has also not been received. So these conditions raise doubt on the scheme's ability to continue paying future benefits to the members as and when they fall due, unless the sponsor can commit to remit the outstanding contributions. Now, even though there is some contribution that the sponsor remitted to set off the dues for those who left during the year, we also realize that the scheme has other expenses to meet. So that might not be adequate enough as we continue into the future. And two, just like I mentioned, that the sponsor stopped deductions effective November 2021. Only the employer portion of the contributions has been accrued in the financial statements. And this may result in the scheme operating as a closed scheme unless a remedial action is taken to reopen the scheme contributions. So this is just as a point of action. That is what basically an emphasis of matter means. That just like we are normally told that we are given some warning letters, so these are warning signs of the scheme. And unless something happens, we are likely to have the opinion of the scheme being qualified as we move into the future, because the status that we have currently does not support the opinion continuing to be an and modify it as we grow and as we move into the future. We'd also like to report that all the other regulations, the resolutions, and all the requirements have been met by the scheme and the trustees during the year. The statements were signed by CPA, FCPA Meshach Matengo on behalf of Matengo and Associates, member number 2061. Otherwise, thank you once again to the members for the opportunity, to the trustees led by the chair, and to all of us for being here today and continue to patronize this scheme, just to ensure that we have some good future for all of us and to be able to secure our future once we leave employment that we are currently enjoying. Otherwise, thank you and may God bless you.
Thank you very much. Thank you very much. I know there is hope, and we thank you for that. We thank you very much for the information you have given us, and we believe that we shall use it and it shall move us ahead. We'll just have to make a twist on our program a bit, because our main sponsor, is already here, and we want to thank you for making time for us. I know you have a very busy schedule, but we want to thank you for making time for us. Otherwise, we just celebrated 60 years of independence. How many of us are 60 plus? By the show of hands. I want to just stand up. Thank you very much. Just stand up, wave, just wave. Thank you very much. Thank you for coming. As a young man, I have an advice to give you, an encouragement. Even as we celebrate 60 years, you are now senior citizens. And somebody told me that you have to understand that you are a treasure. You are an investment to the people behind you. There is something you have. There is some experience you have that you need to give the baton to the young and the upcoming. So wherever you move, know you are an investment to this country, you are an investment to this pension scheme, you are an investment to your family, you are an investment to this country. And you are a resource and a library. Anytime you walk, know that you are a moving library. It is not a must to go to Kenya National Library's office to know that we can get a resource. Anyone who is 60 and above, know that we celebrate you and thank you for coming into this place. And we want to recognize you, appreciate you for taking your time to be here, and to know that out of this benefit scheme, you shall benefit what you invested into. I also encourage the young people, when you look at these people, know they're invested, and that's why they are here, to know if their money is making profit. And that's why we have these trustees to make sure that the money they invested doesn't go to the drains, but have to accomplish what it was designed to do. We are taking a twist in our program a bit. We shall have the remarks from the sponsor, which is the Postal Corporation of Kenya, Mr. John Tanui, our Postmaster General, because he has an engagement that he has to go to, but he has made time. We just want to let us give him a clap, even as we welcome our Postmaster and our official sponsor to be here in the name of our Lord. Mr. Zuleka, Madam Zuleka, karibu sana. Karibishe.
Thank you very much. I want now to take this opportunity to invite our sponsor, Bwana PMG, asante sana. I remember last year when you came in, you had just been given that seat of the CEO, and we were very happy, and we prayed that you'd be confirmed, and indeed our prayers went through. So today I thank you again for making this time to come and talk to us, and I can assure you that we appreciated you as the sponsor before, and they can attest to that. Si tulisema sponsor ndio baba na mama. Without him or without the sponsor, we will not be here, isn't it? So asante sana for all your support, and we want to invite him, Bwana PMG, please welcome and give us your few remarks. Thank you.
Asante, Madam Suleka. Let me take this chance at least to salamiana everyone. Can you say hi to each other? Yeah, somebody next to you, can you salamia on my behalf? Yeah, I'm privileged today. I know last time when I stood here, it is the same position that I stood last time. And it was my first engagement then. And I've just been appointed as an acting postmaster. By then, it was not clear. The roadmap was not to be how. But eventually, I'm here today as the postmaster. Can you give me that minute? So I will be very brief today. One is, dear members, from both Postal Corporation of Kenya Staff Pension Scheme and Postal Corporation of Kenya Staff Retirement Benefit Scheme, representatives of the Ministry of Labour who are here, Social Protection, Retirement Benefit Authority, the Communication Workers Union, I've seen my friend Okwaro, key service providers present, members of the Fourth Estate, and all other invited guests. Ladies and gentlemen, Postal Corporation of Kenya is the official sponsor of the two postal pension schemes, marking their annual general meeting today in Nairobi. The corporation was established by PCK Act of 1999 and operates as a commercial state enterprise in provision of postal services countrywide. We are greatly humbled and privileged to be associated with the two schemes, patronaged by our employees and the pensioners. The two schemes was established by the corporation in the year 2002 and 2010, Postal Corporation of Kenya Staff Retirement Benefit Schemes, respectively as per the Retirement Benefits Act of 1997. The corporation transferred the management of the schemes to the trustees who are seated here, who are appointed by both the sponsor and members in accordance with the trustee rules and rules of the respective schemes and the retirement benefits via transparent elections. Postal Corporation of Kenya Staff Pension Scheme. The scheme was established in 2002 as a defined benefit scheme and closed on the 1st December 2009 after recommendation by an actuarial consultant and directed by the government of Kenya to convert it to defined contribution schemes for members. The scheme is therefore guaranteed 100% by the Postal Corporation of Kenya as the official sponsor. The role of the sponsor in the scheme is therefore to ensure the scheme's assets are always sufficient to meet obligations, including payment of retirement benefits and pension for those already retired through appointment of trustees in accordance with the law. The corporation recognizes the role played by trustees in ensuring that the scheme is well managed to avoid deficits that will require funding by the sponsor. It is noted and appreciated that the scheme's assets are sufficient to cover obligations following the current actuarial valuation undertaken in June 2023, standing at 112%, which is above the funding level. The sponsor is fully committed in meeting all its obligations to ensure members' interests are safeguarded at all times. The corporation also has outstanding rental debts owed to the scheme and is due for the settlement. The board and management are actively looking at this issue and have made deliberation to ensure that it is settled. The outstanding issue has been recorded in our books of accounts as a pending bill. and thus require settlement once the government approves the cabinet memorandum that we are already working on it together with the Ministry of ICT and the National Treasury. Ladies and gentlemen, the Postal Corporation of Kenya Staff Retirement Benefit Scheme, which is the SRBS, Postal Corporation of Kenya Staff Retirement Benefit Scheme was established on 1st January 2010 as a defined contribution scheme where employees contribute 7.5% while employer contributed 12% of their basic salary respectively. In 2015, the sponsors started experiencing financial challenges due to decline in business fortunes and thus caused delay in remittance of members' contribution. The decline in postal industry is a global trend and thus PCK is not an exception. The unremitted contributions have continued to accumulate. Hence, the corporations through the parent Ministry of Information, Communication and the Digital Economy and the National Treasury are seeking authority to reallocate some of our immovable assets to offset the outstanding members' contribution. The Cabinet memo is currently at an advanced stage and we are waiting for approval in order to undertake this strategic development. Once the Cabinet memo is approved, the corporation will fully settle all outstanding staff pension deduction for the period from 2015 to date. I noted this when the auditor actually read his opinion. He actually indicated this outstanding liability currently standing at 1.2 billion Kenya shillings and an interest chargeable on the same principle. I wish to assure members that so far as management of Postal Corporation of Kenya and the board, we have made significant steps in ensuring that this liability is settled once and for all. The sponsor, in compliance with the Retirement Benefits Authority directive resulting from the non-remittance, sees further deduction in December 2021. Further, the corporation has reduced contribution rates from 12% to 10% and is making arrangements to remit ongoing employer contributions while it tries to sort out the outstanding remittance. Members are invited to note and appreciate that once the financial position of the corporation stabilizes, the contributions will resume. The corporation has finally settled the outstanding 5-month staff salaries for the period of July to November 2023, and all staff are expected to have accessed their respective outstanding salaries from yesterday, Wednesday 13th, to today, Thursday, 12th December 2023. So, I wish to assure our members, who are also the staff of Postal Corporation of Kenya, that this challenge of outstanding salaries have been sorted out. And ours is now to refocus our energy, our strategy to ensure that we meet our objectives as required so that at least the welfare of our members at the scheme is also safeguarded. So finally, members, I wish to all members of the two schemes successful deliberation and a fruitful 2023 annual general meeting. And also on my behalf and behalf of management, wish you a Merry Christmas and a Happy New Year as we pass. Thank you.
Thank you very much. Tupatie PNG makofi ya kilo. He has tried and he has worked with us. I remember I was the one who welcomed him when he was an acting PMG, and I welcomed him twice because the first time I had not known that he was given, and then I welcomed him again as a PMG. Thank you very much. We are with you. We shall work to see that what you have as a purpose for this organization will come to pass, because without us you are not, and without you we are not. So we want to work hand in hand with you so that we make efforts to see the dream of this corporation come to pass. We also want to thank each and every one of us who's watching us through YouTube. We are on YouTube, you know, Toko Digital. So specifically want to thank Akasina. I've seen Akasina there. I've seen also a gentleman called Evans Juma. We have, currently we have around 20 viewers, and we want to believe that it's all over the country because we want to know how our money is being spent. At the moment, I will continue. I will welcome the CEO, Mr. Kosgei, to continue from this juncture.
Thank you so much, Bwana PMG, for assuring us about our future. At least there is hope that the scheme will continue into the foreseeable future. Now, I want to do a very quick introduction of the service providers we have here. Even as they prepare to come and do the presentation, we have the fund managers up next. I want to start with the custodian of the DB scheme, Mr. Custodian. Are you called Mr. Custodian? Yes, from Stanbic Bank, we have our custodian. Maybe you want people to hear your voice?
Good afternoon. It's afternoon, my name is Nicholas Musyoki from Stanbic. We are the custodians of the old scheme. Thank you.
Makofi.
Custodian of the DC scheme. Movie.
Good afternoon, members. My name is Michael Mbuvi from KCB Bank, and we are the custodian of the DC scheme. Thank you.
Thank you, Mr. Mbuvi. I want to also ask the actuary to stand up and introduce herself.
Good afternoon, trustees and members. My name is Beryl Bunyasi. I stand in as a scheme actuary. Thank you very much.
Thank you, Beryl. We also have representatives from the service, from the property managers. We have for Riverview Apartments. Maybe allow me to introduce you. That is Gibson Kandiri. He's managing the Riverview Apartments. We have Susan and Katiku managing Lantana Properties. We have Kiragwan Mwangi, Kins Gashie, managing the Mombasa property. I don't know whether we have anybody from Regent. Regent is managing the Ronald Gala property. For the fund managers, we have Sanlam, represented by Lilian Mwikali from Sanlam. We have from Old Mutual, I think he left, Christian Karia was here. Then we have from African Alliance.
Good afternoon, everyone. My name is Gladys Wibiri, representing African Alliance.
Yes, fund manager from the African Alliance that is managing the new schemes. Then we have John Degwa also from ICA Live, managing the new scheme.
The new scheme, yes. Good afternoon, members. As mentioned, my name is John Degwa. I'm a portfolio manager at ICA Lion. Thank you.
Okay, I think that's just about the service providers we have here today. We also have in our presence, we have the representative from the Retirement Benefits Authority. We have John Kerr. He will still have an opportunity to present his input. So thank you.
Thank you, CEO. At the moment, we want to start welcoming our fund managers to give us insight on what we are supposed to do and continue on that. How many are the newest members? Just if you are a very new member in our pension scheme, Just a show of hand. If you just entered this pension scheme very recently, okay, how many are willing? You are not a member and you are willing to join the pension scheme. Thank you, thank you. In our terms, where I am trained, the desire, just the desire, shows somebody wants something. Thank you for your desire, and we shall meet. I've seen somebody, I'll tell you after the meeting. Tumfuate register leo hii, na hiyo nini uweke kwangu, hiyo bonus. Because nimetumia hii jukwaa, at least tutafute members. We need more members, and I want to tell you without any fear, investment is key. Investment is key. It's you're preparing yourself for the future. The future sometimes can be uncertain, but the future belongs to them that prepare for it. You can't just wake up early in the morning and do nothing. You have to see beyond today. And that's why they are here to tell us what we are doing, is it right or wrong. So investment for the future in terms of your pension is key. Don't see that you have just been employed today and think you will not reach 60. I will share my own experience. I don't know how 20 years have gone by since I entered this corporation. I don't know how 20 years have gone by. I just said, this is a stepping stone. I'll go to another corporation. I found myself here. 5 years, 10 years, 15, 20 years. And I can say that out of the two benefit schemes, I'm a member of both. You can calculate my age. I'm a member of both. So don't fear investing. The future belongs to them that plan. The future belongs to them that invest. So currently we want to welcome the fund manager report on investment, Madam Lilia Mwikali, to give us some insight on what fund management entails. Madam Lilia Mwikali. Let us give her a clap. Najua tumechoka lakini lunch itakuja, msichoke.
Good afternoon, trustees, and good afternoon, members. I will be presenting on behalf of Old Mutual and Sanlam Investments for the PCK SPS scheme. So I'll start with our role as fund managers. Our primary role is to advise on the investments to the trustees. This basically entails analyzing the identified securities, constructing a portfolio, reviewing that portfolio, and then reporting back to the trustees on the performance of the scheme assets, as well as reporting to the members during the AGM. We do also advise the trustees to comply with the IPS and RBA regulations. In terms of the economic environment, last year, the last financial year for the scheme, in 2022, the economy expanded by 4.8%. This was a slowdown from the prior year, which had benefited from a rebound from COVID year in 2020. The slowdown was mainly driven by the tough macroeconomic environment. We had high inflation throughout the year, high interest rates, a weakening shilling, droughts. We also had elections, which also led to a slowdown in economic activity and weak global economy, driven by several factors, including the Russia-Ukraine war. This year, we've seen GDP growth of 5.3% in Q1 2023 and 5.4% in Q2 of this year. The projection is for GDP to be around 5.4% for the entire year of 2023. In terms of inflation, as I mentioned earlier, inflation was above the central bank upper limit of 7.5% for most of the year and averaged at 8.8%. This was mainly driven by rising food and fuel prices, as we all experienced last year, and also a weakening Kenyan shilling. This year, we've seen inflation come down to levels below the upper limit for the central bank. When it comes to interest rates, the yields on government securities increased in 2022, primarily driven by the increased government borrowing pressure to plug the budget deficits. And as you can see from the charts on your screens, the yields move was about 100 bips across the longer tenor of bonds and a much higher significant move for the shorter dated government securities. This had an impact on the scheme's returns in terms of paper returns. However, the coupon payments from the government securities remained consistent at about 12.5%. When it comes to the equity market, we saw the market experience a decline of about 23% in 2022. If you include dividends received as cash, the decline reduces to about 18%. This was mainly driven by rising interest rates in developing markets that resulted in foreign investors selling off the local bonds. The reason for that is because most of the investors in the local market, about 60%, are foreign investors. So as they removed their foreign dollars from the exchange, it did decline in value. We also have experienced the same this year as a result of the weakening shilling. Then when it comes to asset allocation, this is how the scheme's assets are invested for the SPS scheme. Last year, majority of the investments were in treasury bonds, which are basically government securities and government treasury bills at 76.5%. We also had an allocation in equities of about 18%. We had an offshore allocation of 1%. We had corporate bonds at 0.4%. Sorry, my apologies. We had treasury bonds at 66.9%, a lower allocation from the prior year, 2022, of 76.5%. The equities reduced from 18% to 15%, and offshore investments increased from 1% to 1.8%. The corporate bonds remained static at 0.4%, while the term deposits increased from 1.7% to 15.5%. We have seen the interest rates being offered on fixed deposits at banks increase to double digits, and this year the rates have gone up to as high as 16.7% for a 3-month deposit. The cash held by the fund reduced from 2.4% to 0.3%. Then the overall fund performance for the year was 7%, and the funds were invested in the allowable securities within the RBA maximum limits. In terms of outlook for 2023-2024 financial year, while we feel this would be difficult, we are cautiously optimistic, primarily driven by the fact that we expect GDP growth to rebound to 5.4%. There are risks within the local environment and the global environment. However, we believe that the economy will be able to overcome this and register good growth. In terms of inflation, we have seen this come down, and we project that this will be sustained. However, there is a risk of higher commodity prices, as we have seen from the oil prices that are being currently floated. When it comes to the currency, the shilling has already depreciated by 19% in 2023 year to date, and we do expect further depreciation, primarily driven by the fact that we have high foreign debt repayments and a strong dollar because of higher interest rates in the US. When it comes to interest rates, we expect this to remain at high levels due to the persistent national budget deficit and increased domestic borrowing appetite. For the equities market, while we'll receive dividend from the strong corporate earnings that we've witnessed from the investments, we do feel that the equity prices will be moderated due to higher investments in offshore markets. However, as a point of optimism and of hope in the fund's investments are well diversified to optimize return for members. With that, I thank you for your time.
Thank you, Lilian. Thank you, Lilian. Kabisa. Basi tumkaribishe na Gladys kwa muda mfupi pia, alafu wafuate na the custodians watupatie report wawili pia. 2 men, 2 ladies and 2 men. The ladies are the bank managers, the fund managers, and then the 2 are custodians. Thank you. Thank you. Gladys, your time now.
Good afternoon again.
Good afternoon.
As introduced, my name is Gladys Mubiri, representing African Alliance Kenya Asset Management and ICA Lion Asset Management. So I think pretty much of the discussion on the economy has been done by the previous fund manager, Sanlam, who is Lilian. So basically, I'll go to slide number 9. I'm here representing the new scheme. So I'll basically talk of how the allocation has been done of the assets. So we did domestic and regional equities of about 20.56% of the fund. Then we did majority of the fund on government bonds, which is about 75.41%. Against an RBA limit of 90%. We also did a bit of corporate bonds, which is 0.37%, and the fixed and call deposits of about 3.66%. So in terms of the asset under management, this basically represents about a total of 1.33 billion of the assets. So what's our strategy for 2023? We plan on retaining about 1 to 30% of cash and near cash investments. Then 16 to about 23% will be on the equities, that's the regional and the domestic equities. Then as we expected for the government to do high borrowing, we plan on capitalizing on that. So hence investing more on the government securities, which is we plan on doing about 74 to 90% of that. So my presentation is as short as that. So thank you very much for your time.
A round of applause, please, for Gladys, the shortest of all. Thank you very much. She has spoken of regional domestic equities. Wow. Please let us have the custodians quickly, please. I'll be so grateful to have Nicholas and Michael.
So thank you. My name is Nicholas from Stanbic. I will mention 5 items. The first item is how we are regulated and how we report. The second one is on how we operate. Number 3, our role. And then I will confirm to you what you are seeing in your statement and in the accounts. So just to confirm to you that we are regulated heavily by 5 regulators. The first one is CBK, Central Bank of Kenya, because we are bound, we are custodian, Number two, we are regulated by RBA because we look after pension schemes, and the RBA representative is here. We are regulated by the Capital Markets Authority because we do financial instruments, add about government securities, equities, corporate bonds. We are also regulated by the NSC because we transact through the market, and also we are regulated by CPS. So you can see how heavily your scheme is regulated. Now, I also want to confirm to you that annually we have an AGM. Remember last year we had an AGM like this, so annually we meet you, members, just to confirm to you that we have your assets. We also meet with trustees every 3 months, 4 times in a year, to confirm what we have under reconciliation. We also send reports to RBA, the Capital Markets Authority, and CBK. Here I want to confirm to you that your scheme is registered, and that's the whole scheme is registered, and we have a registration certificate. We operate in a a structured way. We have you as the client. We make sure that we get your contributions, your maturities, your sales, purchases, etc. So we ensure that we transact every transaction which we have through the account. We also give access to the fund manager to ensure that we don't waste any moments, any time with your money, so it's invested immediately. We work in a structured way between the fund manager and the administrator and the trustees. So we have agreements and service level agreements, and we ensure that we ring-fence. That's a key word for today. We ring-fence your assets. So once they come, we make sure that we ring-fence them and they are separate from the sponsor. Can I repeat that? Your assets are separate from the sponsor. So we have different entities. Your pension scheme is a different entity from the sponsor. And we as custodians, we are independent of PCK, we are independent of the fund managers, we are independent from the regulator, we are totally independent from anybody you see in this room. So we ensure that we ring-fence your assets and we protect your money. So take that word from us that your assets are safe. The role of a custodian is to ensure that we ring-fence that, we get the assets which the fund manager has invested in. So whenever they send money out, we must account for it, all right? Any money that leaves must be accounted for. And that's why you can see the financial statements over there. So whenever you go to a supermarket, you buy sugar, milk, bread, you pay for it, isn't it? As a custodian, we pay that. But we ensure that we carry that and go and protect it. Are we together? So that's very important for the custodian, ensuring that we pay for that and we protect it. The other item is that we invest to make money. You don't just invest for nothing. When you buy equities, you collect dividends. So the custodian is supposed to collect that for you. Government securities, fixed income instruments, we collect what? Interest. So the custodian's role is to ensure that we collect all that, and we also make sure that we do reporting for you. Now, I want to close by saying that the statements you have seen, the ones you have, read into the financial statement, which has been read by the auditor and the accountant. So I just want to confirm that we participated as Stanbic. We participated in coming up with those statements, coming up with the audited accounts. We participated that, and we interacted with all the players, including with the auditor. So I can confirm to you that whatever you've seen, we participated, and we confirm they are correct and your assets are safe. Thank you, and have a good day. Thanks.
Applause, please, for Nicholas, for Nick, from Stanbic Bank. Our money are safe and it's being invested. Please, let's have also our brother Mike coming on board. Thank you.
Okay, thank you so much, trustees, members. Good afternoon. My name is Mbuvi Michael from KCB. We are the scheme custodian, and I'll be taking you through our report for the, this is the AG annual general meeting for the year ended 30th of June 2023. I'll start with the introduction of KCB, being one of the financial institutions in Kenya. We have been registered by the CBK to offer financial services, and also we have been registered by RBA to offer custodial services. KCB, currently we have over 33 million customers, over 598 branches, over 12,000 employees, and also we have over 33,000 agents and merchants. So briefly, that is KCB. For us to offer custodial services, like I've said, we have been registered by the Central Bank of Kenya, who regulates the operations of commercial banks. So for any institution to offer custodial services, they must be a commercial bank. Also, you have been registered and regulated by the RBA to offer the provision of services to retirement benefit schemes, like we are doing today. We are also registered by the Capital Markets Authority to conduct business and transaction relating to Nairobi Security Exchange. And lastly, we are an agent of the Central Depository and Settlement Corporation, CDSC. Like my fellow custodian has said, we are responsible for keeping the financial assets of the scheme safe and also servicing the portfolio related to those assets. Other than that, we also implement investment instruction to purchase or sell investments. Like you've heard, we don't work in sole, or we don't work alone. We have the trustees, then we have the fund administrator. We also have the fund managers. So we work together just to ensure that we safeguard the assets of the scheme. The custodian also holds the document of title for the customer's investment in safe custody. So all the investments that have been done, all the titles of the properties that are related to the scheme, they are not managed by the trustees, they are held by the custodian. So in case you require them, we are the guys now who will provide that information to you. On our role, we have 3 roles. That is safekeeping of assets, which include maintaining proper record of scheme assets ownership. We ensure that all the assets of the scheme are registered in the name of the scheme. We also do valuation, accounting and reporting of assets owned by that scheme. Other than that, we also do asset servicing. This includes income collection, income, be it coupons or dividends. We are been given that responsibility of ensuring that we collect the income and also we credit in the correct account. We do trade processing. This includes tracking, settling and reconciling of assets that are acquired and disposed by the scheme. What are the benefits of appointing a custodian? Number 1, it allows for transparency of operation of the scheme. This ensures that it instills trust and confidence in you as members and also investors. Other than that, it reduces the risk by segregating clients' assets from that of the bank. This means that when KCB is reporting our financials, we normally don't report the assets of the scheme. The asset of the bank and the asset of the scheme, they are handled separately. we have what is normally called off-balance sheet. So in the event that KCB goes under or is put under receivership, the asset of the scheme will be safe. We also perform due diligence role. This includes knowing your customer and ensuring that the scheme is in compliance with the anti-money laundering regulations. Also, other than that, we also ensure regulatory compliance. We ensure that the scheme, the investments that are done by the scheme, they are within the approved limits by the RBA. Lastly, I want to do the confirmations, which is also one of our roles as a custodian. During these meetings, we normally do confirmation just to ensure to the members that whatever has been reported here by the auditors and the fund managers is a true reflection of the correct position of the scheme. So in this case, we want to confirm that the assets of Postal Corporation of Kenya Staff Retirement Benefit Scheme were maintained under our safe custody. We also confirm that all investments were executed as per the fund manager's instructions. Reporting on assets held under custody was carried out to the trustees as per the RBA regulations and guidelines, and the asset held are detailed in the audited account for the year ended 30th of June 2023, which have been presented here. And as of 30th of June 2023, the position of the scheme, that is Postal Corporation Staff Retirement Benefit Scheme, was 1,395,482,753. We also want to confirm to the members that the scheme was in compliance with the regulations and the holding limits which have been approved by the RBA. Lastly, I want to confirm that the assets are secure and they are under our custody. Thank you so much, and God bless you.
Makofi kwa Mike. On behalf of KCB, our assets are secure. Those are his words. Let us have Beryl on behalf of the actuaries. Samara actuaries, please. Beryl, karibu sana. Tell the members what is happening in your report. Thank you very much. Yeah.
Good morning, good afternoon once again, members. My name is Beryl Bunyasi. I am standing in for the actuary. We are the scheme actuary to the pension scheme and also the investment consultant. We also assist the staff retirement benefit scheme where they do need our assistance. I'll start off by just speaking about who Zamara is and our values and our roles to the scheme. So in terms of Zamara, we are an industry player across Africa. We are currently in 9 African countries. We provide both pension and insurance services to companies all across. So in terms of our values, we have 3 pillars that we stand on. That's simplicity, empathy, and trust. This is our main basis even when we are dealing with members. We ensure that the message we're giving is as simple as possible. When it comes to empathy as well, we want to ensure that your concerns are always top of mind when it comes to our operations as well. We also ensure that everything we do is clear even to the trustees so that they ensure that they can have trust in our calculations and every report that we submit to the scheme. Going to the next slide, we'll speak about our role to the scheme. I'll just move forward, please. In terms of what we do for the scheme, the first thing we do is help you liaise with the other regulatory bodies. This would be the Retirement Benefits Authority, with the KRA or anyone else that the scheme needs to contact. We also assist the trustees on a quarterly basis. So we look at both the fund managers' reports, we consolidate those reports, and we come speak to the trustees on a quarterly basis, look at the markets, look at the performance of the scheme, and also help them create a strategy for the next quarter. We also help with the benefit calculations for those who are members of the defined benefit scheme. When you are about to retire and you want your retirement benefits, we would calculate that on our end, and then you would get the computation sent to you. We also help with member training and trustee training on an ongoing basis. When it comes to our scheme commentary today, we do believe that the fund managers have gone through this in quite a bit of detail. So we'll just focus on one slide where we are looking at the fund growth for the last 4 quarters. I know what you have seen is to June. We've just added September to that as well. As you can see for the staff pension scheme, the value of the scheme is decreasing because you are a closed scheme, and right now your main goal is to pay members. What we can assure you from this is we are working with the trustees quite diligently and the fund managers to ensure that the assets you're holding are able to generate revenue. So our main goal right now is to ensure that there's strong income coming into the scheme, and we're ensuring that when we look at the fund managers, when we're creating the documents that you have, it does reflect that as well. Thank you very much. Have a good afternoon.
We were consulting, but thank you very much, Sister Beryl from Actuaries, and you have told us they are in 9 countries. That tells us we are on the right track. Thank you. Now we have the representatives from Mr. Koske, please welcome. We have the representatives from the property managers. Please, Kins, Benson, and Gibson. Please, if you can all come here, it will be very good, so that each one of you will get at least 2 minutes to say something on what we are doing for the scheme. Please, karibu sana. We have Kiragu and Mwangi and Lesser Properties and Last Man 90 Limited. Please, welcome. If the 3 of you can be able to come so that you follow one another, it will be very, very good. We are really running short of time, please. Karibu sana. Starting from, those are our property managers. Karibu. Introduce yourself and
and we are the property managers of Lantana property, which is located in the Westlands. Lantana is like I mentioned, we are property managers, and we specialize basically in the real estate agency, property and facility management, project and development management, project consultancy, and property asset evaluations. Like I said, we manage Lantana, which consists of 8 bedroom flats and 35 units of mansionettes located in the Westland, like I mentioned, going for 16,000 per month and 24,000 per month respectively for the flats and mansions respectively. There was an attempt to increase the rental market to 30 and 60 for the flats and mansionettes, but this was threatened by the court, and I think that is one of the key things that we needed to have done to increase the rental and the income to the members. I'll go to the billing. For the flats, we do an annual billing of 1.536 million, which is basically the 16 by 8 and then by 12, coming to 1.536. In that period of review, we collected 1.392 million, which basically means that we over collected the amounts that we ought to have collected. For the mansionings, we did a billing of 10.08 million. We collected 10,240,000, which adds up to over 100% in terms of rental collection. The property, like it was seen in other reports, is at 100% occupancy, and we appreciate the effort that we've been doing, my team and the board members to have helped us to get that achievement. So basically, for the flats, we are 100% occupancy. We've done collection of 102 for the mentionings and 99% on the flats, with the remaining amount of money having been paid immediately after the reporting period. We've given a few of our add values. We've seen the property is not very well secured in terms of the perimeters, in terms of the gardening, in terms of the grounds work, and we've given a few points of what can happen in terms of improving the value of the property, even with the tenants who live there. I think that's the end of my report, and good afternoon.
Thank you. Thank you, thank you, thank you. Lesser Properties, Benson, thank you very much. You are doing a good job. You say it's 100% occupied? Yes, thank you, thank you. Hi, karibu sana, karibu. Dugetu.
The chair, the two schemes.
Kins from Kirago and Mwangi.
Thank you,
welcome.
Members, good afternoon. My name is Kins Gashie. I represent Kirago and Mwangi Limited. We are the property managers for the scheme for POSTAL Pension Tower, also called GPO Mombasa. And I'll give you a brief report on the performance of the property and a few concerns that we are working together with the scheme to address and ensure that the members are getting value for money from their properties. So firstly, I'll just go to brief highlights for the property. In terms of occupancy, it was at 67% as at the end of the third quarter of 2023. We have a highlight of the tenant profile for the property, where we have the public or the government agencies occupying a significant portion of the property, followed by the education institutions and financial institutions, and the rest follow with smaller margins. Our intention is to try and make sure that we have a balance with the tenants in the property, and we have a variety of tenants so that we can mitigate any risks associated with any industry-specific challenges. The next slide just highlights a few details still on the overview. That's on the performance in terms of rates. And we noticed that we are still within market rates for the property. That's on the ground floor, on the office section, and also in the service charge we're charging for the property. In terms of income for the period to September 2023, we had an increase in the receipts, a 14% increase compared to the same period last year. This is attributed to the increase in the occupancy as we try to push for the lettings in the property. In terms of expenses, there was an increase by 166, and these were capital expenditures done within the year to try and get more tenants into the property. We're currently still pushing for negotiations with other potential tenants, so we anticipate an increase in the income also in 2024. The next slide, let's move to key concerns regarding the property, and we split this into external and internal concerns. On terms of the economic and business environment, this has been adequately explained by the fund managers, and the property market also, the dynamics that affect the property, which we are trying to push to make sure that we have high occupancy and we're also getting a return on investment. The key recommendations on these items are we encourage the clients to be accommodative of flexible terms so that we can increase the occupancy, we can increase the interests for potential tenants. We did see an increase in the same in this past year, and we're working hand in hand with them to ensure that we push for this to realize it. Other lease terms, we are also negotiating with potential tenants to close out on higher occupancy. We also have tenant-specific challenges. These are in terms of payment plans where we've seen we have government institutions occupying a significant chunk of the property, but the payment terms, due to the bureaucracy involved, can be a bit extended, but we're asking the client to be a bit accommodative of them so that they can make their payments in good time. Internal concerns. We have an item on decision making. This is quite key in terms of how we handle the property, and this is something that affects the performance of the properties. So we would encourage the scheme to be a bit prudent when addressing any requests, prompt decision making, and also allowing the property managers to work within certain parameters to ensure that we close out on any potential tenants for the properties. Another item is on the services of the property. We're seeing some of these things which affect potential tenants to come into the building. For example, availability of like a generator, which is a key item, noting that the challenges we're having with our electricity utility provider would be a key item in ensuring that we increase the occupancy for the property. We have issues on repair and maintenance. This also is pegged onto the first item on decision making, where we would encourage the scheme to accommodate having a panel that we can adequately use to address any issues that come up in the property within a good time so that we address tenants' concerns as they come up. There's also available space at the annex, and that touches on the last point, where we have a lot of requests from tenants where they want parking space. So our advice would be we encourage you to consider converting part of the annex space for parking so that we can have a couple more services and amenities for tenants to use. I think that brings me to the end of my report. Thank you.
Thank you, thank you. Welcome, Gibson.
The chairs of both schemes, the trustees, the key service providers, and the members present, good afternoon. My name is Anthony Karaoke Bongai. I represent Lastman and Company on behalf of my colleague Gibson Kadiri. And I'll be presenting a report for Riverview Apartments located in Likoni Road, Nairobi. So we manage the apartments called Riverview Apartments. It is a residential development. We composed of a total of 33 units within 4 blocks. In regards to the financials and the billings and the collections, the total annual billing for the year ending was 9,967,000, whereas the collection that we did for the year ended was 14,010,930. This shows that we were able to collect an additional rent of 4,043,930. We have been proactive in collecting the rent, so we do see that in the coming years we'll be able to collect even more so that we can have a rent-free property for the landlord. In regards to the improvements for the property as well, we have adopted a rental rate of 40,000 per unit from the previous 19,000. So this one has been adopted positively by the tenants and they are paying in good time. And we also adopting a rental charge of 50,000 for new tenants. So we want to achieve a maximum return for the landlords and also ensure that they achieve a principle that we call highest and best use for their properties. One of the challenges that we are facing is we request for the landlord to see a fast tracking of the approval of major repairs and maintenance works so that we can improve the properties in order to actually bring in more tenants into the apartments. Service providers, we do request if the service providers can be procured for the property in terms of cleaning and gardening, and also provision of security lights so that we can have a secure property for the residents and also for the landlord as well, and also having a property caretaker within the premises so that we can oversee the daily activities in the estate. So we want to say thank you for this opportunity to work for the scheme, and we look forward to working with you in the next coming years. Thank you.
Makofi. They are doing very good work. They brought us 9 million, and by the wakatengeneza another 4 million. 14. That is great work. Makofi kwa huyu jamaa tena, tafadhali. Thank you. Asante sana. We are very happy for the custodians taking care of our properties and investing by giving out those house rent, and we get house rent out of that. Very good. Now, let us go moja kwa moja mpaka kwa RBA, Regulated Retirement Benefit Authority. Please welcome our hands together for Brother John Care. Karibu sana John Care. Mike niwe.
Chair and member, Board of Trustees of the two schemes, honorable members, service providers, ladies and gentlemen, hamjambo. So, you know, I was looking at the program and I saw I was given 5 minutes. So, which means from where I come from, when you're given 5 minutes, you shouldn't take much time. So while I'll not take 5 minutes, maybe a little bit more, my presentation will just be very short and brief. You know, there's a popular saying, mambo ni matatu. So mambo yangu ni matatu. Number one is, first and foremost, let me convey the greetings from our CEO, Mr. Charles Mashira, and my boss, Mr. Jackson Guthu. I mention their names because I know trustees know them. They've been talking to them and engaging with them very regularly to address the challenges that the schemes have been facing. So they convey their greetings. But secondly, I stand here in my capacity as the representative of the regulators to talk about developments in the sector, pension sector, but also the scheme health. So I'll start with the sector so that then when I talk about the scheme, there's context. So the industry is growing, and to date, we have assets under management or in the schemes of 1.7 trillion. We have 1,076 schemes. We have, of which 5% are defined benefit, like one of your schemes, the closed one, and 95% are defined contributions. We have total around 7 million members. Active members are 3.2, which stands at about 46%. We are keen to grow those numbers as an authority, and that can only happen through growth of schemes like yours. Fund service providers, who are the fund managers, the custodians, and the administrators, have also been increasing, which is also a testament to the growing opportunities within the pension space. All this sums up to a mere pension coverage of 25%, which is why we are talking about growth. We want to see more Kenyans saving in such schemes. That's why we not only support occupational schemes like yours, but we also have now what we're calling independent pension schemes for those who may not be privileged to work in organizations that have schemes like yours. Our aim is to ensure that all Kenyans will have a dignified retirement once they reach that particular age. But of course, there are many challenges that we are facing as an industry. We've heard today the phrase unremitted contributions, and that's not unique to your scheme only. It affects many other schemes, and we know because we are dealing with multiple cases. Of course, we know the economy is one of the major factors that has led to this particular challenge. And so as a regulator, we are collaborating with the various sponsors, but also the government, because majority of these schemes that have unremitted contributions fall in the public sector, to see how we can address these particular challenges. So the one for POSTA, as I've already alluded to it, we've had several meetings as an authority with the parent ministry and with various, and made presentations to various, both parliamentary, National Assembly and Senate engagements on this issue of unremitted contributions. So we are working with all parties to address it. I think the other concern we have is the issue of inadequacy of benefits brought about by either the low contributions that are being made into schemes or the withdrawal of those benefits by members. So us as an authority, we are keen on ensuring that dignified retirement. So ours is to urge members of schemes to try as much as possible to preserve their benefits in their schemes. The other thing we've seen and has affected your scheme is this, I'll call it investment bias towards government securities. We have seen that there's been heavy placement in government securities, particularly bonds. And what has happened is when it comes to providing for accounting for those particular bonds, there is normally a negative provision that has been made in the accounts. We have been explained that upon maturity of those bonds, this could be reversed, but we have seen that that has affected the valuation of schemes. However, we are also happy that innovation has penetrated into the pension sector. We've seen a lot of pension products being offered in digital platforms, and we are keen to embrace and support those because they will also facilitate coverage, increase of coverage and access to pension products. One other thing we've seen is a significant shift from occupational schemes to umbrella schemes. This is because, of course, some schemes are finding the responsibility of running a scheme to be heavy, so they want to transfer it to others. Having said that, the scheme is vibrant. We are helping the service providers and the schemes and all stakeholders to deal with the issues that they are faced with. So in this regard, when it comes to the scheme, we've been working with the trustees to address the issues relating to the respective schemes. So I'm happy to note that with respect to the two schemes, when it comes to compliance, which is the submission of various returns and reports and doing what is expected to do as per the law, both schemes are compliant in that regard. But what we do, once they comply and give us those reports, we analyze and assess those reports. And it's in that where that's the process we call supervision. And it's in that where we pick qualitative issues that we want to discuss with trustees. So in respect to the old scheme, I think I was very happy when the auditor was able to highlight some concerns, because those are the concerns that even we, from a regulatory perspective, will look into. So when it comes to issues of the financials, the fact that the investment properties value is higher than what the regulations provide for is a concern. That affects liquidity of the scheme, and we have been told it's a closing scheme. So I don't want to overemphasize or talk about these particular issues because they've been so articulately pointed out, but it's just to challenge trustees to come up with relevant strategies to address these particular challenges. With respect to the DC scheme, we've had the issue of unremitted contributions. And it's an issue that has been, the authority has spent so much resources in terms of time, in terms of money, in terms of, to try and address this particular issue. Therefore, we are keen to see the cabinet approve the necessary papers to which will then allow for the funding of the scheme and these unremitted contributions. Of course, when we look at the financial, we not only look at contributions, we also look at investments. We noted the low investment, again, a challenge to trustees and the service providers to see how best they can improve that to at least above the inflation rate that has been stated or declared. We noted the legal fees again, which significantly increased the expenses, and therefore, again, to trustees to see how best to manage expenses. As was indicated, if the scheme grows, yes, there should be a positive correlation on the scheme expenses. If the scheme is shrinking, then those expenses ideally should be shrinking. So maybe to look at that. When it comes to contributions, the authority is in receipt of a letter from the sponsor who was requesting that we should lift the cessation of deductions so that then contributions can be made into the scheme. When we got that letter, we considered all factors. The key factor is that we, as an authority, need to see goodwill from the sponsor to ensure that when we lift up that whole issue of cessation of deduction, that there will be sustainable contributions into the scheme. It will just happen for 1 or 2 months and then it will stop again. Therefore, as an authority, we wrote back in asking for that confirmation that there'll be a sustainable way of ensuring that contributions shall be made to the scheme. So all in all, we are happy, but those are our concerns which we shall continue working with trustees to ensure that they are addressed. To do what? To ensure that members' benefits are protected and are paid on a timely basis. My third and final thing was to just update you on some changes that may have happened in the legislative side, and I've categorized them into benefits, financial, and governance. So when it comes to issues relating to benefits, from 2022 up to 2023, we've seen the amendments of the law. Of course, the access to benefits, we all are aware, is now at 50%. So if you were to leave a scheme and you want to access your benefits, you can only take 50. The other 50 remains until you attain retirement age. The other thing is, as an authority, we sought to diversify the benefits relating to pensions. So what we did was to ensure that there is money in your pocket. Then you can also provide for housing through what are called mortgage regulations. And then we also have a law for health, which is called the Post-Retirement Medical Fund law. So when it comes to the mortgage regulations, they were introduced in 2009. In 2009, you could use your pension benefits as a security to get a mortgage. But in 2020, we introduced the provision or the regulation where you could actually use a portion of your money to buy a house. However, last year, these regulations that enabled people to use their pension to buy a house were suspended in court. And just to update you that suspension still holds. So we await for the court case to end before we can direct the industry on the way forward. When it comes to health, there is what is called the Post-Retirement Medical Fund, which was introduced. And this basically provides for members to contribute towards a medical scheme so that when they retire and they stop being members of the occupational medical scheme, they actually have a medical cover. Now, that is ongoing. The beauty is that in this year, the 2023 Finance Act had introduced some tax reliefs with respect to contributions into such schemes. So when you contribute to a post-retirement medical fund, you get a relief of 15% of that contribution, and this is capped at 60,000 per annum, or at least 5,000 per month. Then, of course, any income, because these post-retirement medical funds are invested just like your scheme funds, any investment interest is exempt from income tax in that regard. So whether through your scheme or as an individual, you know that you can provide for your health going forward through such a scheme. The other thing related to financials relates to the implementation of the NSSF Act. We all are aware what it provides for. We all are paying more. So from a regulatory perspective, RBA can contract out occupational schemes which wish to get the tier 2 contribution rather than them going to NSSF. And I heard that being pronounced. So when the schemes are ready, they'll submit the documentation to the authority, we shall process. We've automated the process, and they'll be able to get their scheme contracting out certificate for the sponsor and reference certificate for the scheme, and they will be able to proceed that way. Lastly is the issue of governance that I want to highlight. This year, on 5th of May, there were gazetted what are called trustee remuneration guidelines. These are based on scheme expense guidelines. And this is basically a guideline to help trustees in the determination of scheme expenses, particularly allowances to trustees, service provider, how to come up with service provider fees, and basically a standardized way. Because when we looked at, did our research, we noticed there were a lot of variations, and some schemes were getting a raw deal, whilst in other cases the service providers were getting a raw deal. So we agreed to come up with a guideline that should give a fair framework on how to come up with this. Basically, these talk about, they classify the allowances based on scheme fund values. So the two schemes are valued at they fall between the 1 to 10 billion category. Therefore, there are provisions in those remuneration guidelines on what the allowances should be. But at the end of the day, you as members have the right to help trustees. You're the ones who have the say as to whether trustees will adopt these guidelines, rather the remuneration based on these guidelines or otherwise. And I've seen again on today's agenda that you're going to have such an activity. So just to know that there are guidelines that are provided for such proposals. We've listened to the industry, and particularly on the issue of tax exemptions. So this year we forwarded to the National Treasury for its consideration some proposals to review the taxation on the lump sums that members get upon retirement, and also on the pension amount. You will notice, you'll appreciate that when you are retiring and you're being given a lump sum, there is that 600,000 that you get is deducted before tax is charged. So that 600,000, what we are seeking to do is have it increased so that then you go home with more and pay less tax. Then when you are getting your pension, between the ages of 60 to 65, your pension, the first 25,000 of your pension is normally tax-free. Any amount over 25,000 is taxed. What we are seeking to do is to increase that tax-free amount from 25 to a figure, I think the figure was about 40,000, so that then pensioners can take home more. Since we've attempted in the past to remove the whole issue of taxation from 60, but we've not succeeded. The other thing that we have proposed, which will affect you financially, is to review the valuation method for bonds, so that then we move from mark to market, which is holding or recognizing the bond at the current market value, to what is called hold to maturity, which is the value of the bond upon its maturity. The fund manager will tell you this will significantly improve the valuation of those particular bonds. So again, we are seeking to help schemes in that particular way. Lastly, because yours is also a public sector scheme, there is a review of the requirement of public schemes compliance with the procurement law, and therefore we have noticed that when it comes to the procurement of services, etc., the procurement law may have some aspects of it that schemes may find challenging to comply with, and therefore we are looking at reviewing those particular provisions. So with those three very broad remarks and presentations, I want to just encourage members to continue supporting the trustees as they do their work. I want trustees to also continue encouraging members. They have trusted you to represent them in this very difficult work. You have been empowered. Therefore, trustees, please serve these members with the diligence they require, and to assure all of you that us as a regulator are present. We have an open door policy, and we shall ensure that we shall support you in every aspect to ensure that every member has a dignified life after retirement. So thank you very much, and back to you.
Thank you. Thank you very much. Thank Thank you very much. Thank you very much. I've taken a point there. They have an open door policies. You can be able to approach them. Any query, they'll advise you individually so that what you have as a query will be answered. I will continue thanking the online viewers. We have one, Eunice Kingori, who is watching us, Agnes Lempaka. We have Lucy Wanjira, Abayo Ouko, Lucy Mbudia. Thank you very much for following us online, for your urge to be fulfilled, because they desire to know what is happening here. Our time, we have tried to maintain our time and manage it. I'm happy to call our trust secretary again, just to give us on the approval of the trustee enumeration policy. Mr. Elijah Koske, the floor is yours.
Thank you, MC, and thank you, Bwana Kea, for setting the stage. And I want to assure members that we have a regulator who listens. If they were not listening, we would have been closed by now because of the challenges that we've continued to face, and especially on the unremitted contributions. Yes, our next agenda is approval of the trustee remuneration rates, and I think Kea has mentioned that on May, I think it was 5th of May, the Retirement Benefits Authority gazetted the regulations that are going to guide remuneration of trustees. That is, if trustees are remunerated. In our case, trustees are remunerated, and therefore they came up with guidelines of how much they should be remunerated. I would want to take you through that paper. There's a paper which we are sharing there. And even before I do that, I would want to take you to the background of all this. Why did they introduce trustee remuneration policy? This was to manage expenses in schemes, because it was noticed that some of the schemes are very small and their expenses are very high. And therefore they had to come up with guidelines through which now we can be able to base remuneration on. And if you notice on the guidelines, you will realize that if your fund value is above 40 billion, above 10 billion, your trustees are paid a higher sitting allowance. Why is that the case? Because they want to encourage schemes to grow. The more you grow, the more you get rewarded. And therefore, if the scheme is below 1 billion shillings, below 1 billion shillings up to 500 million, the sitting allowance is pegged at a maximum of 15,000. Anything below that is a maximum of 10,000. Above 1 billion and below 10 billion, the maximum sitting allowance is 25,000, and anything above 10 billion is 40,000 sitting allowance per sitting. Now, we have been taken through the accounts, and I believe each and every one of us knows where our schemes fall. The new scheme is what value? Who can remember? 1.2 billion. The old scheme is 5.037 billion. So according to that, we then prepared a trustee remuneration policy that is required by law now to be approved by members once every 3 years. So once you approve, it runs for 3 years before the next review is done. So in adopting this policy, the old rates, I'll take you through that. The old rates, what were we paying trustees as sitting allowance before? We were paying 25,000. What are the new rates? 25,000. Why are they the same? This is because 3 years ago, because RBA actually came up with these guidelines, but they had not been gazetted about 3 years ago in 2019. And they encouraged schemes to start implementation. And I think we were one of the first schemes to implement that. And that's why you can see the sitting allowances are not different. Old rates 25, new rates 25 for each of the schemes. Now, if it happens that the scheme falls below 1, you know the rates are less than, actually maximum of, it's going to be maximum of 15. But now, you know, the approved rates must run for a period of 3 years. They have also introduced chairman's responsibility allowance. They have recognized the key role played by a chair of the board in coordinating the board, in liaising with the scheme on matters that may not require the chair to come and sit there. So they introduced a chairman's responsibility allowance up to a maximum of 5,000. What were we paying before? 5,000. What are we proposing? 5,000. So we are not changing anything. We have just retained because we had implemented the policy anyway. On daily subsistence allowance, the regulations now require that all major towns and the other towns are paid separately. Because, for example, if a trustee were to go to Mombasa, the cost of accommodation is not compared to if they were to go to Oyugi, or if they were to go to Kajiado or somewhere. So the regulations now introduced rates depending on the town. Major towns, which are basically the cities, Kisumu, Nairobi, Nakuru now, and Mombasa. Kisumu, Nakuru, Nairobi, Mombasa. Those are now categorized as cities and therefore major towns. The maximum out-of-pocket allowance is 20,000. No, not out-of-pocket. Per diem allowance is 20,000. Other towns is 15,000. So that is where there's a change. On daily subsistence allowance, out-of-pocket allowance, we used to pay trustees an out-of-pocket allowance to cater for out-of-pocket expenses whenever they travel outside town, and that now we have zero rated. If that is a valid word. This is a tax country, zero rating. We have zero rated that from 15 to 0. So that's a saving. On foreign accommodation, if in case trustees travel out of the country, which I think our policy has not allowed that because of the challenges. I think even Kea mentioned that the schemes are declining, and therefore we should be able to manage expenses. If trustees travel out of town, then they will be paid according to the rates that have been provided there, $500 per day. On travel allowance, ordinarily the scheme would be able to facilitate trustees to travel to the venue of a meeting, like for example here. But in the event that trustees are not provided with accommodation, then they are reimbursed mileage up to a maximum capacity of 1,800 cc, where they use their own vehicle to the venue of the meeting. But in case the scheme has provided transport and a trustee opts to use their own transport, they will not be reimbursed any of those expenses. So we want to submit this to the members. This is the policy that the board adopted by a resolution of the board, and therefore we submit this to the members. And the way we are going to do it, we are going to do a poll to be able to know who is supporting and who is not supporting, as guided by the regulations. So I would want our ICT to put up the link. Maybe you can go to your phones. You can go to your phones, those who are members, those who are eligible, and you have registered. Go to your phone and type HTTP. It's been displayed there, so that we do that very fast and we see the results and we close. Okay? Can we do that? Okay, Wi-Fi password for those who want to connect. Those who are online, are you able to vote? Can we confirm that we are able to do that so that we close this? Go to your browser, open HTTP. Yes.
Sorry, my name is CPA Matimbani, and I wanted to reject on the mode of voting. Probably, I think we know the members who are online. I think if we could be able to do the manual online, the members who are here, then we know who are online. I think that will be better. That's just my suggestion, for reasons which we well know. Thank you.
Okay, that is not a money. You are suggesting that those who are here vote manually by acclamation. I say those who are of the opinion say aye. Those who are of the contrary opinion say nay. Those who are of can I repeat? Those who are of the opinion, say aye. Those who are of the contrary opinion, say nay. The ayes have it. Let's see the votes from the online group. Yeah, it is, if you look at this, this is in the best interest of, there's a reduction of cost. But if we don't approve, go back to the same regulations, clause number 22. There is something it says there. Those who are online, can we see their results? ICT, do we have the results? How many people have voted? How many? We can see the screen, huh?
Mr. Koskei, there is a concern. Usijaribu kutumia kabambe kufanya hii kazi, haitaenda through. You need a Android system, and then go to Chrome or Google. Go to Chrome or Google, type HTTP first, the way it has been projected on the screen. That is when you shall manage. Usiende kwa search kutype HTTP, Google ama Chrome. Are we together?
HTTP, I've been able to open. I don't know who else has been able to open. Yeah, then vote. Do we have our online followers? From my report here, I can see 50% yes, 50% no.
They can still vote. How will you know? How will you know? They have their vote. You post the challenge.
Have we succeeded? Have we? Conflict of interest. It is saying, okay, the ICT person is sorting that out. Who has succeeded in voting? How many? 1, 2. Only 2. Yeah, I think those of us who are here, there's a technical hitch, especially when the online viewers, online followers vote. For those of us who are here, let us just vote by acclamation or the ayes and the nays. Then we have a proposer and a seconder. Then we will get the online votes and be able to finalize. So I think we had said the ayes have it. Or do we repeat? The ayes have it. Thank you. So we need a proposer to adopt this and a seconder. Proposed by? Proposer Ngetich. Yeah? Oh, Robert Rob. Why am I calling you Ngetich? Robert Rob. Seconded by who? Yes? Who? Helen. Thank you. That's the end of that exercise. Yeah.
Thank you very much, Mr. Koske.
Sorry, I think members were not sure what we are naying or eyeing. I think the question should be very clear, whether we want to support this, the new rates or the old rates. Can it be put clearly so that members are able to vote? Okay? That's my suggestion.
Abraham, can you project that paper so that members can see old and new rates? Are we able to see? Mbani? Can I pose the question again? We have been presented with the trustee remunerations indicating the old rates and the new rates, and they are similar for the two schemes. The reason is the fund value for the two schemes is above 1 billion. So the sitting allowances are 25,000. Old rates, 25 new rates. So the chairman's responsibility allowance, the same, old rate and new rate. Daily subsistence allowance, this means 20,000 shillings for major towns, that is cities, and 15,000 shillings for other towns. That is whenever trustees go out there. Previously, we were paying accommodation for the hotel and an out-of-pocket allowance. So now that has been removed. Out-of-pocket from 15 to 0. Foreign accommodation, the same, though that is rarely used. Travel allowance, all rates of 15,000 maximum. Mileage now at the rate of AA, subject to a maximum vehicle capacity of 1,800 cc. So, I pose the question. Do we approve the new rates or no? Those who are of the opinion say aye. Those who have the contrary opinion say nay. The ayes have it. Thank you. So let me...
Thank you, Mr. Koske. Even as we consume what we have done, and wait for the next session, DJ, weke kamziki kamoja hapo, tukifanya interlude fulani hapa, kabla tutaendelea. Just try and understand what we've just done and the implications thereof as we consult some 2-3 things here. In the meantime, as you are listening to the music, we are going to a question and answer session. You can start by drafting your questions on a piece of paper so that when we stand up, you'll be direct to the point. We want to make sure that in the next very few meetings, we are done. In the next very few minutes, we are done. And we conclude our meeting for today. So we want to listen to the music and have that interlude. Draft your question. Think of your question so that when that question and answer session reaches, you'll just raise up your hand, answer the, give the question as they prepare to answer, and then it shall be done. DJ.
He's smiling. Are you also watermelon?
Bwana atanibariki kwa kadri ya utajiri wake, kwa kipimo cha kujaa, kusopwa hata kumwagika. Atanipa mahitaji yangu kwa kadri ya utajiri wake, kwa kipimo cha kujaa, kusopwa hata kumwagika. Bwana atanibariki kwa kadri ya utajiri wake, kwa kipimo cha kujaa, kusopwa hata kumwagika. Baba nichukue, nifunze, nataka kusoma kwa shule yako, kwa shule yako. Nichukue, nifunze, nataka kusoma kwa shule yako, kwa shule yako. Nikiwa nawe kama mwalimu, ninajua nitahitimu, nitashinda adui.
Thank you, DJ. Thank you, DJ. We want to go to questions. I will request, if a question has been short and you have a chance, don't paraphrase the same question. Ndio tukuwe na very few time tuweze kuanswer all the questions that are at hand. So if you have the same question na umepata mwingine ameshasema, usiinue mkono tena nini. Just relax, it will be answered. So I'm opening the floor to give the questions. We shall give the question first, even as they write them down, and then when their time comes to answering, they'll be answered en masse. First person, question. Nani wa kwanza? Nimekuona. I'm flexible, usijali. I'm very flexible.
Thank you, trustees and our members. Good afternoon. My name's Pamela Ogoe. Just retired in October this year. I've clocked 60 this year, 2023. And I want to take this opportunity to thank all of us who have worked together for the cooperation you gave me. Now, my concern, or maybe my questions are two. I just want to ask, because all I know that when we are employed, we are permanent and pensionable. So that one automatically makes us members of this scheme. So when we are asked if one desires to join the scheme, I fail to understand who are these people to join the scheme. If there is any other person that is to join the scheme apart from the permanent and pensionable, then the HR has a lot of work to do. Because if this is not done as I know, then automatically we are killing the scheme. I don't know if you've got my point. Who is this who desires to join the scheme? Does it mean that the newly employed people are given an option of joining the scheme? If it is so, then we ourselves are killing the scheme. My second concern is there was this miscalculation of our pensions that was in court and was won. May I ask you people to enlighten us more about it? Thank you.
Second question.
Good afternoon, everyone. My question is about the compliance to RBA, that is where our assets are not supposed to exceed 30%. And I think we have heard that we are at 63%. I think so. So my question is, what are we doing? Because the more we retain these assets, these properties, the more we are spending, because to maintain them is expensive. And what has hindered the scheme from disposing them? Every other day, properties are being sold. Why have you retained them? Could it be a cash cow? Because the more you want to retain them, the more you will spend on them. There is no good reason so far that has been given as to why those properties are not disposed. Because when we look at some of those properties and the mismanagement that is happening in those properties, talk of Ronald Ngala, talk of Mombasa and GPO, the mismanagement is so glaring. It is so glaring. And this says we are not serious to take this scheme to the next level. My other question is to the officer from RBA. You have clearly said that you already have a letter from the sponsor requesting that you reinstate the deductions. I wonder even why in the first place you received that letter. Because we are already stuck in a situation whereby the remittances from 2015 have not been remitted. To us, that is a conspiration. And it begs the question, why? Why in the first place would you entertain that? Because you entertain that, you are adding a problem to a problem. 3 is again to the RBA officer. He has very well expounded that the categorization of remuneration has been done and actually categorized according to the portfolio of the schemes. And when you said, when you highlighted that the sitting allowance is 25,000 per sitting, per schemes that are from, I think, 5 billion to 10 billion. Look at where we are. We are add old scheme and the new scheme, we are ranging 6 billion. Yet, here you people, you have voted a maximum sitting of 25 million. That should be talked of, that could be the amount claimed by the central bank pension scheme, but not in a hailing scheme like this one where we are hailing. We are not making anything. We are not making any progress. When you look at those balance sheets, it's negative. And yet you give yourself the maximum amount of 25 million per seat. 25,000. At this rate, we are killing this thing. Mark my words. At this rate of claiming the allowances, we are killing this scheme. We may not come here many other times, but you'll come here and find there is nothing. The coffers are empty. That's my take. Thank you.
Good afternoon, everybody. I'm Florence. I'm a retiree. I want to ask about the properties. The properties are underpaid. According to the new rate, they are not supposed to be paid that much. How are you going to do about that issue? Thank you.
Any other? So we can, okay.
Thank you. Good afternoon once more. Matthew Mbani, CP is my name, and I have two concerns or questions. The first one, I'll address the auditor. Probably the first question is that you confirm to us whether you are duly qualified to undertake this engagement. Just confirmation. The number two, whether you comply with the International Ethics Standards Board for Accountants, ESB 5, and if there is any threat, if you have been independent, and if there is any threat to your independence, and if there is, what you have done to reduce, if there is a threat, if any. Then the next one is about, we have seen the report, the auditor's report, on page number, the new scheme, on page number 12, on the emphasis of matter. I think we are all aware. We are all aware of what is happening, and International Standard number 570 talks about the going concern, and it's very clear that we have indicators that this scheme may not be a going concern. Probably, I think our auditors are not bold enough to tell us that the going concern is threatened. And we have had the RBA talking about telling us how the going concern has been threatened, and still they continue to give unqualified reports. So that emphasis of matter, probably is it material enough such that you could not issue a qualified report? Then the last item, or the last question is about, I'm not sure, I just want some clarification about the CEO of our scheme, the tenure of office. Do we have a tenure of office, or it's a lifetime job such that some of these guys can apply? Thank you.
Thank you, Bani. Thank you, Bani. I've recognized that you are articulate and you are concerned about our pension scheme. Any other question?
Good afternoon, everyone. Good afternoon, too. Our trustees there, my question is for you. I'm Faith Kwawala Munijui. I have a very simple question. No, I have two questions. One, I think it's to the management of the Postal Corporation of Kenya. Are we permanent and pensioning staff? Hiyo ni swali moja nataka kujibiwa. Because sometimes my children wananiuliza, mami. Wacha tu nisiulize. But that question is, I demand to be answered. Secondly, this pension scheme, according to all of us, do we really see the future? Or we are enriching our trustees' pockets at our expense of suffering? I want to be answered those.
Thank you. My name's Joseph Mumo. I have one concern. From the reports we've had that we have a whole 286 million in terms of rent arrears. I wanted to understand what efforts are being put in place to get this rent collected. Further, we also heard that GPO Mombasa, the occupancy is 68%, Ronan Gala is 50%, and of course Lantana is 100%. I was shocked to hear that we are only getting 2% out of a portfolio of 63.7% worth of properties. I want a comment on that.
Any other question?
Can we take those ones?
I think we can take those ones first.
Let me start, Bismillah. I'll start with the question asked by CPA Kialo Mbane. I'll not touch on the issues relating to the auditor, but the issue of the materiality in terms of the going concern related to when you said, are they courageous enough to report that matter? I believe they were courageous, and in terms of materiality, yes, we know, and considering the efforts the trustees have taken that matter in terms of the unremitted contribution, that efforts which the trustees have taken has also been taken into consideration. If there were no actions which were taken by the trustees to address that matter, I will agree with you, it will have been a matter, a serious matter, which will have related to qualified report. Maybe for the purpose of those who are not accountant, qualified report ni kama kitu ni mbaya. Yo, the audit report, what he saw, everything kama ni mbaya, it is called qualified opinion. But when it is reported unqualified, based on all those items that he has read, things were okay. In that specific matter, the auditor or the management or the trustees have provided to the auditors, when he raised that matter, the efforts which have been taken by the trustees to address that issue. Especially the issue of the court case which we mentioned, where PCK was compelled, all the efforts and the communication that we had with RBA, PCK was enough to satisfy the auditor that that matter cannot warrant the auditor, the audit report to result to qualified opinion. And then, in terms of the appointment of the CEO that you asked, the CEO is on a contract. 3 years, contract renewable. His first term has ended. Based on the performance target that we have signed with him as trustees, the board of trustees renewed the term a further period of 3 years. So he has just begun a new term. So please be patient to wait for the trustees to make a decision. If his performance will not be good, the trustees will make a decision whether to advertise internally or externally. But he's on a contract of 3 years. Thank you.
Good afternoon. I want to tackle the question on the issue of properties. The one which was raised by Mr. Mumo. As you had the requirement, the RBA regulations require that we have 30% in property. But what is happening is that we have overshot, and we are now at 67%. This 67% as a result has increased because of the valuation of the property with the passage of time. Initially, it was not at that percentage. But trustees have made efforts to offload this property. You notice that I think in 2019 and 2020, there were adverts for the disposal of these properties. But the offers which were given were below the book value, and therefore the scheme could not sell. And now we have made fresh efforts, I think, a changed strategy. The scheme will use property agents, which is allowed as per the Procurement Act. There was an advert for the pre-qualification of the property agents so that they can assist. But even when the property agents come, they have to comply with the procurement law, and there has to be the reserve price, and the reserve price is what is in the books. Because if you sell below the books, then I mean the book value, then it means the value of the scheme will decrease by the shortage that you have sold. On the issue of rent, somebody raised the issue of rent, that what is being paid in terms of rent law. That is true, but the trustees have really worked hard. If there have been court cases in respect of those properties, every now and again, case, we finish one case, they file a. But we are happy to report that so far we have succeeded. Riverview, we managed to review the rent from 19,000. Previously, the rent was increased from 16 to 19. Then an ongoing court case, we managed to raise that rent from 19 to 40,000. Although the market value that we ideally get is 50,000, but the court decided that we get 40,000. And since that was a court decision, we can't go against it. So we are getting 40. That's why you saw that there is improvement in the rent. About the issue of occupancy, the property agents are here. They have made efforts to ensure that the property is fully filled to capacity, especially the commercial ones. But you do understand that from the time of COVID, people moved and they started working from their houses. And then again, the places where some of these properties are stretched, like Ronadingara, the business people don't want to go there because of the matatus and all that, the noise that is around there. And even some of the tenants who are there actually moved out. But the property agents are working hard to ensure that all the spaces are occupied. But again, it was indicated here that the status of those properties, they are old properties, they require a lot of maintenance. And we, as trustees, we have made a resolution that we cannot spend more money than what you are getting from that property. Because it will mean that if you have to maintain them to standard, it means you have to get money from another source, other from that property, to put it up to the standard that you want. And then even if you still maintain it up to that standard, you know, like Ronadingara, how many tenants are willing to go there? There are no people, probably they only, and then the trustees are also aware of the fact that they want to dispose of those properties, so you don't want to incur so much money when you are not sure whether that property is going to be occupied, and then you end up selling it. Mombasa Chipio, I think they are also making efforts to have full occupancy for the same reasons. The issue of outstanding rent of 286 million, this is largely from PCK. You know PCK occupies Ronadingara and the Mombasa Chipio, and you know the financial position of PCK. They have not been paying, but of course last year, the last financial year, we have seen some improvement. They have made some payments, which is quite positive. And then they have also given us a promise that once they get funding from the government through the CAP memo, they'll be able to clear that amount. I believe that will cover the issue of properties. The other issue is the issue of the calculation, the formula used for calculation pension. This relates to the new, I mean the old pension scheme. What happened is that when staff were under KPTC, there was a different formula. There was a formula which was being applied in calculating their pension scheme. During the transition to from after the split, during the transition, the Act provided for a specific formula that will be used in the schemes which were formed thereafter, and that formula is what the scheme is applying. There were some pensioners who are dissatisfied with that. They went to court. The court directed that the matter goes back to RBA. RBA made a decision and said that what the scheme is using, the formula the scheme is using to calculate is the proper formula as per the directive or what the Act provides. And that is it. So as we stand right now, RBA has already rendered this decision. We believe that the matter will either rest there, or if there are pensioners who are dissatisfied, they will still have a right to go to the RBA tribunal. I believe I've answered those questions. If there is anything that I have not clarified, I will be willing to clarify thereafter.
Thank you, Julius. On this matter of efforts which we are doing to ensure that the rent is collected 100%, I think he's forgotten something, or maybe I didn't hear it, but as we saw that we have the sponsor, yeah, who is the major culprit on this issue, especially payment of rents for GPO and Ronangala, and we have tasked them to at least surrender excess space so that the rent amount is reduced. And so far we have managed to, or PCK has managed to surrender GPO space, and we have already given it to someone else. We are now receiving rent. We are still pursuing Ronangala, and I'm happy to see that the boss is still with us here on the table, and we are pursuing that matter so that you surrender the space or part of the space for Ronangala so that we can give it, rent it out elsewhere. And it will also help you as PCK to ensure that at least the rent is reduced and the debt doesn't increase substantially. Okay? So those are some of the efforts we are doing in terms of getting rents, the outstanding rents from the sponsor. Thank you.
Okay, in terms of the question asked by Bishop Kasuvu, kwanza utatusaidia kuuza hizo property kwa kanisa yako. Ndio. Ya, Ronangala anasema iko nafasi kubwa, unaweza kufungua branch ya kanisa yako. So, on the question that he asked, why RBA accepted the letter of resumption of the deduction, I'll tie with the question asked by Faith Kerich. Faith Kerich, I know you. Ulisema wale haukujui, si ndio? Sasa, she asked whether she is permanent and pensionable or not. I agree with her. That's why we are trying to pursue that issue of resumption of pension. The pension is your future. If you are not contributing, by the time you retire, Faith, and become like this senior citizen, God willing, what pension will you go with if you are not contributing? So as trustees, that's why we were pushing to ensure the resumption. As Care has also mentioned, pension contribution has also a benefit in terms of your pay-as-you-eat, pay, because it is a relief. In fact, from what he said, even me, I prefer now, instead of KRA taking all my money as a payee, I will start contributing the post-medical retirement scheme, so that I get more relief in my salary, so that I have a future to save than that money going to KRA and it's not benefiting. So in terms of the contributions, the deductions which have been done, it is a relief for you when computation of pay is done. So we have been having a discussion. Our board members, 2 of them are sitting here. They have directed that PCK return the deduction, the resumption. If they can pay you like these 5 months, aki tulikuwa tunangojea pesa mingi. If it was deducted from you, it will have come to the pension. Now it has gone 100% to you. We don't know how you are going to utilize, but that is a matter. We will still engage RBA to allow us, for the benefit of the members and the scheme, if PCK, they have committed themselves that the deductions that are done through your payslip will be remitted to the pension scheme as we wait for the employer, so that what Faith is saying, you become permanent and pensionable. So it is, Bishop, for our own benefit as members, if that deduction is being done. Like now, we have looked at all options, even creating a pay bill so that we get the deduction from your side. We have looking for other options, maybe the one of the personal, which may not be good. So, wacha turudi nyumbani, we get that deduction. In fact, last week, I was with the 2 trustees who are also board members of PCK, and they were very hard on Nancy to remit that money. So we have the goodwill, Banakea. PCK now have the goodwill. If the board have made that directive, please kindly support us. Just give that letter she's using as an excuse not to remit. Kindly give them, because they are using that letter as a leeway. As the chair, if things are not done, because I've been elected, next year, God willing, if that is not done, I will take RBA and the sponsor to court, so that that deduction is effected. Thank you.
Good afternoon. I think Mukhtar has answered part of the question I was to answer. Somebody asked who is being invited to join the scheme. And I believe it didn't come from the trustees. At the moment, there's really no one who is being invited to join the scheme and others not being invited. Since December 2021, when we ceased the deductions of to pension and sending contributions to pension. And remember, it was really not our will, but our regulator here pressed on us, if you are not able to remit, why do you continue deducting, which made a lot of sense anyway. We had a really big backlog. But all I can say is that since that time when we stopped deducting, anybody who joined the organization after December 2021 is not contributing, so at the moment they can't really be called permanent and pensionable, but all I can say, the goodwill is there. We've had a meeting, a very fruitful meeting with the Bonacare and the team at RBA, and Bonacare, we are almost back with the conditions that you gave us. And the goodwill is there. The sponsor is willing. And we discovered that anyway, we were not remitting, but where did that deduction go to? It went back to your net pay. So we're in discussion with the finance and payroll, and we have come up with a very, very good strategy on how we are going to resume. So after we do that, now those who are asking whether they are members or whether they are permanent and pensionable will definitely become permanent and pensionable. What is the future of the scheme? There's a lot of future. Don't lose hope. There's a lot of future. The goodwill is there. The sponsor means well, and it's just a matter of time. We have an agreement with the RBA, and once we do that, I think we are going to resume. So the future is bright. Things may be looking a bit dull at the moment, but there's a lot of future for the new scheme. Asante.
Thank you. I have a few online questions. One, I don't know whether it's anonymous. It's important to know who is asking. My concern is those of us who retired in 2019 are still waiting for our unremitted dues. Yeah, I think this, we have talked about the 1.268 billion that is outstanding from the sponsor. So the sponsor has not been remitting those contributions. We have talked about that. And the scheme can only pay you what has been received together with the investment income. Method, what is the method or criteria for pension to take home? We compute pension based on a formula. I believe that member is talking about the DB scheme because that's where pension is drawn. Where you get paid your benefits depending on how long you have worked and what salary you are earning the time you left service. The time the scheme was closed. You remember, the old scheme was closed on 31st of December 2009. So therefore, your service is computed up to 31st December 2009. And your salary, which is final pensionable salary, is the salary you earned 12 months to December, which is January to December. You sum that, and then you increase that at a rate of 3% per year up to the year you left service. So for example, if you are earning 18,900, that is 18,900 times 12, that is 226,800. You multiply, and you left service in 2021. So I'll do 226,800 times 1.03 to the power of the number of years. That becomes the basis of computing the pension. So if you need more details, we are available. We will be able to provide you with those details. Another question from somebody who has sent a message was the issue of rent at Mombasa GPO. I think trustees have talked about that. But the very specific question is Huduma, which is situated within the building, billed for its occupancy of our space? Yes, PCK surrendered that space. We gave it to Huduma, who are paying handsomely for the space. On the other matter that this member has raised is the policy on review of pension. 2 to 3 years does not inspire or augur well with us. I hear you. Pension increases are done based on advice from the actuary. If the scheme is able to afford, after undertaking an actuarial valuation, then the pension can be increased. I am sure some of the pensioners who are here, you have received bonus at some point. Because based on the actuarial valuation, the actuary will undertake a valuation which, by comparing the assets and the liabilities, not looking at only liabilities of those who have retired. There are those who are also coming. So you take into consideration all that, take into consideration the assets. Are assets way above the liabilities? If they are way above, then you can be able to accommodate a pension increase or a bonus. Now, the 2 to 3 years, there is a 3-year increment that is, it does not depend on the valuation. Every 3 years, every pensioner gets an increase of 3%. The other matter is on the issue of, lastly, he said, as we embrace this festive season, I cordially convey my heartiest goodwill wishes and warm facilitations to staff and management of Posta Pension Scheme. The scheme played a remarkable role throughout 2023 by facilitating our monthly pensions within reasonable timelines. That is where you clap for us. Looking forward to a robust and harmonious working relationship with PPS in the year 2024 and beyond. Happy New Year 2024, Peter J. Thiongo. We will also still respond to the questions he has asked comprehensively because he has documented his questions.
The issue of the future. The future of the pension depends with the future of PCK and the efforts as employees of PCK that they will do. If PCK will, God forbid, that will also be the end of the pension scheme. So we need to work hard to ensure that PCK also survive, because as pension, we cannot do anything without the sponsor for both the two schemes. So we also have a responsibility as members or employees of Postal Corporation of Kenya. On the question asked by Ambane, whether the auditor is qualified, please refer to page 13. You can see the membership, the practicing membership number, and if you have any query, you can follow with ISPAC to confirm further. And on the issue of the threat to independence, they will have raised, and I don't think they will put it in this report. From the engagement stage is when they will have raised that matter, if there was any threat to the independence, and they will have discontinued the audit at that stage. So, tuonane kando baadaye tuongee mengi.
I think there's something that was mentioned about the court case. I think there was also a court case on the new pension scheme. I talked about the old one. There was a case which was filed by trustees on the unlimited contributions. I don't know whether the person who asked the question referred to that one. That one, there was a judgment, as you heard, and the judgment was inconclusive. Inconclusive in the sense that PCK was requested to deposit in court the list of properties that they intend to transfer to the pension scheme, and as well compute, because the case was filed way back in 2017, and it was asking for a specific amount. But by the time the case was being determined, the amount in arrears had increased. But when the court was making a decision, the court was not sure as to how much was outstanding by then. So part of the compliance was that PCK was required to file a report in court as to how much they have deducted from staff which they have not remitted. And I think that's the bit about the case. And as he indicated, the PCK has not complied with that, but there have been discussions, and the PCK is saying that they are largely depending on the approval of the CAB memo to be able to sort out the issue of the outstanding liability of about 1.2 million.
Thank you, trustees. There's a question online regarding the number of meetings that trustees hold. The same trustee remuneration policy has provided guidelines on the maximum number of remunerable meetings. The maximum number of remunerable meetings are 6. And if you look at 6 meetings, there are 4 which are quarterly. That is mandatory. Every quarter when the service providers are presenting their reports, they must present the reports to the trustees. Those are 4 meetings. And then an additional 2, like this one is excluded from the meetings. But there are additional 2. One would be for approval of budget. That's a special meeting. The other one is for approval of financial statement. That's a special meeting. So there are only a maximum remunerable meetings of 6 in a year. And somebody raised an issue on the issue of, on the 25,000 payable to, I think it was Kasuvu, payable to trustees. Not 25 million. Okay. Yeah, let me remove the other 3 zeros. 25,000 shillings payable to trustees, yet the scheme is not doing well. Now, the regulations that you have seen provided by RBA has actually provided for that. If you're not doing well, your allowances go down. If by tomorrow you fall below 1B, your allowances are cut from 15 to, 25 to 15 to take care of schemes that are not doing well. So it is an encouragement, a motivation that trustees should do well if they want to continue earning those allowances. Thank you. Yeah, and that amount is taxable. 25,000 is taxable. Oh, housing levy is also there. I mean, everything that, everything tax is there. So they don't go home with 25. Yes, Khadija.
Another mic, please.
My name is Hadija. I'm a retiree, and my concern is about the gentleman who just talked before Mr. Koskei. I think that's Mr. Opini, the Corporation Secretary, if I'm not wrong. You've addressed issues concerning the portfolio and the assets of the scheme, and that would mean that you are actually representing the scheme in legal, you are representing the scheme in giving them legal guidance and how would I put it, advice. And being the corporation secretary, I believe you're also representing the corporation in your capacity as the corporation secretary. What does this say about the legal implications? Because for me, I believe there's conflict of interest in this. I don't know what the scheme says about having a corporation secretary representing both the scheme and the sponsor at the same time. Thank you.
Thank you, Khadija. I think the scheme has got its legal advisors. And if there is any issue of a legal nature, the scheme normally seeks advice from the panel, from the advocates who are in the panel. And even when there are court cases, the scheme is represented by independent advocates. I only assist the scheme using my skills as an advocate, just like Mukta as an accountant can assist the scheme. You know, even trustees need to have a skill. But when I go to the scheme and sit as a trustee, I sit as a trustee and I give the best interest of the scheme. I put the interest of the scheme first before anything else. And I hope I've answered your question. If not, Basically, what I'm saying is that I don't sit in the scheme as a legal advisor of the scheme. The scheme has got external lawyers who are independent and are able to give the scheme independent opinion.
We need to take interest of the diaspora people. A question from the online viewers. My question goes to RBA. What are you doing to caution pensioners from PCK? Are the owners stroke the sponsor? It has many trustees in there. I think this one, the rules are very clear in terms of the composition of the trustees. If it is the old scheme, the DP scheme, the sponsor has a share because it is a DP, it is to that representation. And if it is for the members, they are given 2 slots, which the members elect after every 3 years. Currently, you are being represented by Moses Moy and Joseph Tele as an elected. So I think there is no provision to give a direct nomination to pensioners or any other category. Even Moy last time is a pensioner and he participated in that election. The term is expiring, God willing, in March. The floor is open. Anybody who feels is qualified and can face that competition, you are highly welcome. For the new scheme, Nimukate Nusu, 50-50. The DC, the sponsor nominate 3 and members they elect 3. So already we have declared 1 vacance, which is closing today, and if anybody feels, you can apply. In fact, according to the guidelines from RBA, the composition is very clear. There are certain criteria that need to be followed in terms of the composition, issue of gender, issue of qualification. We are trying as much as possible to give us a lot in terms of gender. You can see here we are a lot of men, but for ladies, when we don't have that gender balance, we normally have a discussion with the sponsor to do that balancing. If it is a qualification required, we request the sponsor, because the sponsor has that leeway to pick the right person. Unlike this one where we go for election, we cannot just go do direct nominations here. Everything must be done through elections. It is only the sponsor who can be able to do the balancing. So for trustees, pensioners who are interested to become members of this board, election is coming. Let's wait for time, and you're highly welcome to apply. Thank you.
RBA, please, for response. We shall be closing any time from now.
Yes, so it's fine. Okay. So also just to, the first part of that question was, what are we doing to cushion pensioners from the sponsor? Now, you see, the contributions are deducted from your payroll, your pay slip. Then those contributions are supposed to be taken to the scheme. What was happening is there were deductions, but they are not going to the scheme. So that's why the RBA instructed the sponsor to cease deductions. In effect, the cessation of deductions was protecting you as a contributor by ensuring that the money that would otherwise have not gone to the scheme came to you as an employee. So in effect, you get more money. Now, in such a situation, it's you as a member to decide whether you want to spend that money or you want to save it through an alternative scheme. But we've heard that the alternative scheme is not a good arrangement if you are already a member of an occupational scheme. You are saving in two schemes. So what RBA did was to ensure that the money that would otherwise have become unremitted ended up coming to you, and that's how we protect. Then the second thing is to hold the trustees and the sponsor accountable to ensure that they pay those unremitted contributions. And this has been the conversation that we have been doing with them. The issue of winding up was mentioned here. The law is very clear. There are steps that have to be followed to ensure that contributions are paid. And if those contributions are not paid, then you wind up the scheme, because the scheme has no business getting money or rather, the scheme has no business if money is not going to it. So for us as an authority, the last resort was winding up. We had gotten to that point, but through the different engagements with the government, the sponsor, the trustees, we were able to revise that particular decision. And now we are seeing that those arrangements that were, or rather those agreements that were met during those particular meetings are what are being implemented. So to answer just that earlier question, why are we entertaining, is because also we have seen a change. We have seen that there is positivity in terms of the pay that is coming on a timely basis. That was one of our requirements, that we have to first see employees being paid on a timely basis for us to know that the deductions will actually be there and shall be made. So the sponsor's sustainability is a key consideration, and until we have that assurance, RBA will not lift this particular issue. So the assurance is what has been mentioned. It's now starting to come. We gave some tough conditions. They are being finalized. So as a regulator, our second mandate is to protect your interest. So that's what we shall do. We'll protect your interests. We'll also protect the sponsor's interests to just make sure that everyone has an equitable opportunity to undertake their respective roles. So that's what we've done for members and for pensioners. Thank you.
That's very nice response. Why?
Okay, good afternoon once again. My name is Mwai Pogo. I'm a retiree. I want to first start by thanking all those people that gave me this opportunity to come and serve in this board. As we end, I want to assure you that your interests are being looked into. As long as I'm in that board, I will ensure, and continue to ensure, that our interests are put at the forefront. I have a fiduciary responsibility to make sure that we get the best of our return of investments. But before I end, I'm being persuaded to give you just a small history of the two properties that are giving us a lot of headache. That is Lantana Flats and Riverview. Those properties were formerly given to staff who later on retired like I did. But unfortunately, they felt that probably those houses belonged to them. And because I know that they could be somewhere washing, and probably some of them are even here physically, we are here to remind them that those properties are not theirs. They belong to all of us. Sinikweli. Because that is the group of retirees like me that have continually given us litigation after litigation. They take us to court. We send a lawyer there, and you know it's not for free. We are paying a lot of money in terms of representation fee. So I want to remind my fellow retirees that those properties belong to all of us, and they have got two options: to pay according to the market rate, or pack off and go. I'm saying that without any reservation. Walipe kulingana na market rate. Si ni kweli? Ama wakishindwa wafanye nini? Wahame ndio tukodeshe hizi nyumba kwa wale ambao wanaweza kutulipa vizuri. Those properties are in very prime areas, Westlands and Kileleshwa. Even the charges, the prices that we are giving them for, 24,000 for a 2-bedroom house is still very, very low. But then, having been our friends and our fellow staff, we cannot be very hard on them. Because again, the law of tenancy is very biased against the tenant. As I sit here, I mean against the landlord. As I sit in this board, I'm the landlord of those houses. But the moment they take me to court, I cannot be compelled by myself or any other quarter to go and remove them forcibly unless I'm directed so by the court. So the way the law of tenancy was drafted is very biased against the landlord. So we need to persuade them to keep up, to up the game, pay according to the market rate, or they go. Once again, thank you very much.
Thank you, Mwai. Thank you, Mwai. Now, allow me to finish. But before that, we will give our trustee, Mrs. Mathenge, to close with, of course, give a vote of thanks. And then we shall call our branch manager, A City Square, to come and close with us in a word of prayer. And then we shall also declare our food blessed so that we release people to take their lunch and we come to the end of it. So welcome, Ms. Mathenge.
Thank you, MC. Before I give a vote of thanks, somebody who is party to me, that maybe I just need to remind ourselves that the contributors of pension are you members and the sponsor, that is PCK, and your contribution is 7.5%, and currently PCK contribution is 10%. So the member contributes and the employer contributes. So that's just a clarification because it had not been mentioned there before. So that makes the employer an interested party in the scheme management. Now, we really have been sitting here since morning. It's been a long day. I hope we have learned and we have been informed, and your questions answered, and they are varied questions. But before all that, we want to thank God that this was planned way back, and it has come to conclusion. We really thank God for this far that He has brought us in PCK and even the pension scheme. And even making this day a success, we really thank God. We thank our sponsor and PMG who made it here. He gave his time to come and be with us and update us on the status of the sponsor and the support that they continue to give the scheme. At this juncture, I also want to appreciate the senior citizens and, of course, other members. You are the ones who make the scheme what it is. So thank you very much, the senior citizens who made it here, and even those who are online, and those who didn't make it. You are the one who make the scheme, and we value you a lot. Then both chairpersons, Madam Zureha, thank you very much for steering the old scheme, and Bwana Mukta, thank you very much for steering the new scheme, and of course the other members of the board. We really appreciate all of you for the job that you are doing. Of course, the CEO of the scheme, Bwana Kosgei, and your team there, you've really been working day and night to make this a success. We appreciate the job that you are doing, Bwana Kosgei, and thank you very much. I know that you communicate every day with the senior citizens in the forums, and sometimes they have very hard questions for you, but you have managed to weather the storm, and you have managed to give the proper answers, the information that is required, and please keep your doors open so that they continue asking the pertinent questions and you providing that information that is required. Of course, we thank you, the service providers. Thank you very much. The auditor, the banks, KCB and Standard, for being here, the actuary and the fund managers, thank you very much for the continuous job that you're doing for the scheme and giving us that professionalism that we require. Then our regulator, represented by Bonacare, thank you so much. I know that you are very hard on us at some points, but when we came to your office, you were so kind to us, and we were able to reason together. And of course, we realized where we went wrong, and we are ready to rectify. So when we come back, please listen to us. You've been listening. You have given us guidance on what to do. So we don't take that for granted, and we appreciate you. You continue giving us that guidance. Of course, there are a lot of people. This space that we are using is provided by the regional manager, Bonatere. Thank you very much for providing this venue. And behind that, there's a great team that Bonatere was working with. The HR team, thank you very much. And those who are providing the services today, we really appreciate you, and we don't take that job that you have done today and yesterday, even organizing this place, we don't take that for granted. Thank you very much. I think if there's someone that I may have omitted, feel appreciated, and all I can say is that our prayer is that we continue making the scheme work for us, and we'll do our best as trustees, and all I can say, may God bless each one of us. May God bless you for those who traveled to come to this place, especially the senior citizens. We thank you, we appreciate you, and may God bless each one of us. Asanteni sana, Mungu awabariki sana.
Thank you very much. We are coming to the close, and therefore, just before photo session, I've been informed, I would want Abdurazak, please come so that you close with us with a word of prayer. And then after that, we take photo session, and then we come to the end. Karibu sana.
بسم الله الرحمن الرحيم الحمد لله رب العالمين الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين.
If you have not said amen, he has finished already. Thank you very much. Thank you. Now, photo session, can you lead us on that program?
Maybe we can do it very quickly. Trustees and service providers can line up here. Trustees and service providers, then followed by pensioners. Service providers includes the regulator for now. For today.
Some Duke on the vibe.
Hapo itakuwa sawa.
This year, blessing, money, testimony.